We're going live. We're back, baby. How you doing, guys? Welcome to Stock Markets with Bruce, your Uncle Bruce here for Thursday, March the 18th. Nice to have you here today. Nice to have you joining me. I appreciate you coming by. I hope you're going to have a good day today, make lots of money in the marketplace, and hope the weather wherever you are is the way you want it. Hopefully spring is in the air. Gotta say, here in Creston, definitely getting better in Creston. We actually hit 60 degrees yesterday, the highest temperature since I think probably early November, just after Halloween. But we don't believe it's over. As far as winter goes, we're not so sure if that's really it. This is one of those, hey, this is coming, but don't count on it because we could still get 2 feet of snow at any time. But, the forecast looks good in the 50s going forward for a while. 12 hours of daylight, 12 hours of nighttime. The big turn is happening now, the solstice. So that's coming around. Yes, the sun's angle is improving. Kind of feels warm when the sun is shining on you, doesn't it? You notice when you're outside, or have you noticed when you leave your car outside for a while and you get into it, it's warm. The car warms up when you leave it outside. That's a sign that maybe we got stuff coming our way. So even if we do get snow, maybe it'll just melt off. Fantastic. Thank you, everybody, for being here. And have you noticed the new emoji you can use on the channel? Have you seen it yet? I hope you have. I hope you're enjoying it. We just launched it. I think we got it launched last night. And so if you haven't seen your new emoji, check it out and use it to your heart's content. I'm loving it. We're getting more. We're getting more added all the time. So bear with us while we get our emojis organized and added into the system, and you guys can hit the there we go. We got bagels and we got diamonds, and now we've got I want a rock coming out. So yeah, it's happening. Oh man, any suggestions for emojis? Let me know. I'm thinking of a few others over the next little while here. There'll be a bunch of them coming out. And thank you for joining me today here at Stock Markets with Bruce, your Uncle Bruce from Canada. Today's news and what's going on in the markets. A couple of things going on. I've noticed, like for example, the Dow is off 23 points today. No big deal. This is pre-market, indications. We have S&P down 27 points, down 0.69. And then NASDAQ off 216 points. This is the index that's taking the biggest hit because of the supposed interest rate concerns. And even though yesterday the Federal Reserve chairman said we're going to keep a low interest rate policy right through to the end of 2023. That's this year, next year, and the year after. I mean, that's pretty good long range of very low interest rates. The 10-year note, it touched 1.75. It touched it. It's tickling it. I think the U.S. dollar is down a little bit. I kind of go, really? That's kind of funny how this is going. Anyway, I can't explain the bond mentality, but if you're trying to protect your U.S. dollar holdings, you'll buy U.S. Treasuries if the yield is higher. So if the U.S. Treasury now pays 1.75, or at least that's what the market says it's paying, that's what it's trading at, not what the U.S. Treasury brings it out at, but that's where the market has it priced at right now. You're overseas, you buy American dollar-based 10-year note, you're locking in 1.75. You're guarding against a 1.75% drop of the U.S. dollar against your currency. You're trying to hedge it. Now, if your currency drops against the U.S. dollar currency, let's say you're in France, or you're in Italy, or that's euro. But let's go further. Let's say you're in India, you're Pakistan, you're Thailand, you're Vietnam. You're trying to protect your country's currency value. You're buying U.S. dollar notes, And if the US dollar rises against your currency, you're a winner because you get the 1.75% in interest rate and a gain in the currency. On the other hand, if the US dollar slumps a bit, it's being offset with a 1.75 interest rate. And it's this delicate high wire act going on between all the world currencies, which means all the world banks, every country's own national banking system is balancing their currency against US currency against other currencies. And on goes the game. And then you have the bankers themselves, the hedge fund managers, the pension funds out there, the mutual funds, the insurance that's being purchased by currency speculators, and the amount of currency changing hands on a daily basis dwarfs the market like you cannot believe. You cannot compare the stock market dollars changing hands to currency changing hands or bonds changing hands. It's 100 times more. It's massive. It is the free market of free markets. And you won't find any congressional hearings in Washington hauling in currency traders to talk about how you're trading the US dollar. None of that, that is verboten. No one goes near that. They leave that to the Fed. They leave that to the Treasury people, and then all the bankers take care of their business. There are probably, there could be hundreds of thousands of people around the world employed just by currency trading companies and all the world banks out there. It's just a huge number, and they're silent. They're you don't see them being talked on, interviewed on TV shows. They don't appear in TV shows. They do their thing. There are currency analysts, yes, and there are private currency traders, the ones that are part of maybe the big brokerage firms in Canada and in US and in Europe. Sure, you get the Deutsche Bank guys, you get the Royal Bank of Canada guys, you get the Goldman Sachs guys. Sure, yeah, and they write books, and they do speaking engagement. But the Bank of Canada and the U.S. Federal Reserve, you don't see the traders for those guys on camera discussing their trading strategies with respect to their nation's currency. No, that's state secret. Not gonna do it. Not gonna happen. So anyway, that's another market which I'm not going to get into with you. that's another whole thing, but it can affect the mood on Wall Street, the mood of real estate brokers, the mood of mortgage lenders, the mood of car companies with regards to what offers they want to offer you to buy a new car, or your local bank with regards to what kind of interest rate they'll need to set to offer you a line of credit or a personal loan or whatever you need. I mean, yeah, the big boys set the tone for all of the rest of us, but it can shift quickly. And it ebbs and it flows. It ebbs and it flows. So right now we have the 10-year Treasury in the U.S. Tracking higher. That is causing concern among investors who are wondering, well, the higher that goes, if I can get a guaranteed return for 2 years, 3 years, 5 years, 10 years at a higher rate, do I now decide to take some money off the table in the equity market and put it to work elsewhere? Well, on the Dow, they're saying no, because we're down 25 points on the futures, which is not even 0.1% this morning. So there's nothing happening on the Dow 30 industrial. So that's fine. Not that they're all industrials, but that's what we used to call them, the Dow 30. The S&P 500, the 500, let's say, largest profitable making companies in America, the S&P 500, they're down 0.69% as an index today. Is this a concern? No. This is a nothing. NASDAQ down 1.6%. Is this a problem? Actually, no. No, it is a slight dip, but there's a lot of money on the sidelines going, yeah, I'll buy Apple on sale. Sure. Yeah, you want to give me Apple at one of the lowest prices in the last 3 or 6 months? Knowing what I know or hearing what I'm hearing about Apple and its new product line. Didn't we just hear this morning? I don't know if you know this, but I heard this morning Apple is coming out with new iPads that are faster, more powerful. I'm not surprised. I mean, my big ass iPad here, it's a big ass iPad. This baby was state of the art 2 years ago. Now it's not state of the art because that's how this business works. I mean, they come out and it's the hottest product for 6 months, 8 months, and then it's not the hottest product anymore because welcome to the new world as we regurgitate and regenerate and bring up newer, faster, stronger, sexier product every year now. Apple has now, and the indications are now that new computers and iPads are coming. Well, duh. I mean, has anyone been paying attention to Apple the last 20 years? I mean, Steve Jobs loved the presentation days, although he may have hated the idea of being on stage in front of a bunch of people and trying to show off a product that's a prototype and hoping it will work or not. But, he wanted to let everyone in on, this is what we're all about. This is where we're going. What's the rest of the world doing? Because here's where we're going. You coming with us or not? And so the world evolves. So yeah, there are people out there who are going, yeah, I'll pick up that Apple stock. Sure, you're giving it away? Yeah, I'll take it. But the same can be said for other FANG stocks. So Facebook and Alphabet, which is Google, and then you've got Netflix to a degree. You've got Microsoft. You have Amazon. Yeah, I mean, the Amazon people, they've been upgraded to go from. There's a stock analyst on TV yesterday saying Amazon will go to. We expect 4,000 a share sometime this year, 2021, but we expect long term. So beyond this year, 5,000 a share is doable. It's in the 3,000 range, 3,100. But if you look at that, you think about that. Oh my God, it's going to go up $1,800 a share, $1,900 a share. Oh, that's crazy. Well, think about it this way: if the stock was a $30 stock, they're calling it to go $40 to $50 in the next 2 years. That's not outrageous prediction if a company is growing its business and footprint and profitability. So if they don't want to split the darn thing, 10 to 1 or 20 to 1, if they don't want to do a split and they want to keep this thing trading at 3,000 something a share, why? I do not know. Then fine, go. Then that's it. You have to just go. Alphabet, same thing, trading at thousands of dollars a share, not doing a split. Apple is not interested in having their stock trade at $1,000 or $2,000 a share. They're trying to keep their share in this $100 to maybe $80 to $200 range, kind of, sort of. And so if it goes to $350, they'll split it again, and that's what they're doing. And shareholders love it, and that's the deal. Anyway, we'll see how that goes. Other things coming up today that I wanted to tell you about that I'm hearing about that are getting me kind of concerned and also raising my little radar popping up here. First of all, Ford Motor Company. All right, Ford has joined DraftKings, and I'm surprised that it's gone this way. Although maybe this has been going on a while and it is the other way around, but. I told you, I think yesterday or the day before, about DraftKings, where they're looking to issue a bond, some convertible notes, bond and notes, senior notes, 1.1 billion they want to issue dollars worth. This is DraftKings. DraftKings wants to issue $1.1 billion in zero interest bonds. Zero interest bonds for $1.1 billion. This is a SPAC 6 months ago. This company was a SPAC. Well, I'll clarify it. DraftKings was never a SPAC itself. DraftKings has always been its own thing. It was a private company growing out of Boston, adding employees, sports betting, fantasy sports betting, on and on and on, doing their thing. A SPAC came along, and the two of them had a chat, and DraftKings agreed to take over the SPAC because at the end of the day, most of the shares of the public company DraftKings are held and controlled by DraftKings people. A minority of the shares that are out there trading are SPAC original investors that created the company in the first place. In any event, it's 6 months later, 8 months later, here we are, fast forward to today, and the stock has been trading around 65 to 72 bucks a share, something like that. And this company, which has only been public for 6-8 months, is announcing a zero interest bond for $1.1 billion. Now, I'm telling you, I'm sitting here talking to you about the SPACs that I like. I've got a group of 6 SPACs I've been talking about. I've been indicating to you that I have a list of SPACs that I like. I have a list of companies that I like that I think These are companies that I think are short, medium, long-term investments that you can make. I'm sitting here going, oh my gosh, we have a company that was merged into a SPAC earlier, like not even a year ago, and it's trading in the $60-$70 range, and now they're offering $1.1 billion of a bond with zero interest. They're not going to pay any interest. They want to borrow your money for 6, 7, 8 years and not pay you a dime for it. And then the kicker is it's convertible, and they're saying it's convertible. And this is why we're not going to pay any interest. You can convert the bond into stock in our company. And I'm thinking, as an old stockbroker kind of guy, I'm going, that's great. Okay, if you have a bond fund, like a mutual fund bond fund that can't buy stock because they're a bond fund, they can buy these bonds from GameStop. Maybe they buy 50 million. This mutual fund buys 50 million. That mutual fund buys 20 million. That one buys 60 million. And you could cobblestone together $1.1 billion from a bunch of bond ETFs and mutual funds, and retirement funds can buy the bond, knowing that you can convert the bond down the road into stock of DraftKings without holding the stock in the meantime. Because if you buy the stock now, you suffer the ups and downs of the market. And if you're a bond fund, you're not allowed to buy stock. That's not in your covenant. You're a bond fund for a reason, right? And as soon as you do convert it, what you'll do is you'll convert into stock, you'll sell the stock, and then you'll buy another bond in something else. That's what bond funds would do. It's not that they can't even convert it. Yes, they can, and then they can liquidate it, and then the fund has this extra cash in it because the hope is that the stock will be trading at a higher price than the conversion. Why else would you convert? And then you sell out the money and put the money into another bond or T-bill or whatever you're going to do with it. Well, I thought, yeah, okay, as an old guy from the 70s and the 80s and the 90s and the 2000s, having been in the business in Canada and having been in the business in Cayman Islands offshore, I thought, oh yeah, well, what's the conversion rate? This sounds pretty good. 90 something bucks a share. It's 40% higher than where the stock is trading at. So I now am going, wait a minute, what are you saying to me? You're telling me you want me to give you money and you're not going to give me anything back for it? I lose to inflation. I mean, frankly, I give you $50 million for up to 6 or 7 years, 8 years. And over that time frame, I have to suffer the depreciation of my money because I don't get any interest. And inflation, whether it's only 1 or 2% or whether it's going to 3 or 4%, there's inflation. And so if I don't convert and you give me my money back at the end of the bond term, I get just my original money back. That's now 15% less valuable because it's the year 2026, 27, or 28. But you're offering me the stock option, but it's 40% higher than where it's trading at now. Why would I, as a bond fund, take that deal? And I thought this is a one-off. This is out there. Well, no, apparently not, because this morning Ford Motor comes out and they made a release. Just read it. Ford is issuing a couple of $1 billion in bonds. Zero interest. They're not offering any interest from Ford. You can buy bonds from us and we'll pay you zero interest, but it's convertible into Ford stock. And if you believe in our car company and you believe in our plan to become manufacturers of electric vehicles like Tesla is already, you can buy into our company and you can convert the bond into our stock. I'm looking at that deal. I'm going, it's a 40% premium for that stock as well. And I'm going, I don't get it. I don't know why a bond fund would care to be in this deal. I just don't see it. I would rather just own the stock directly and the bond fund manager, I'll pass on this deal. That would be my attitude. I'll pass. Because I'm just not interested in gambling, throwing the dice out there that you guys are going to be successful in the conversion into electric without glitches, without warranty problems, that you're going to be seamless. It's going to be a seamless thing. And knowing that you guys have to sell millions of units of electric vehicles at the profit margins you have to ultimately make a profit. And the hope is that your product, when it's on the road, is a reliable, durable product, because if it shows any sign of recall activity, the third recall, the fourth recall, drivetrain problems, motor problems, I mean, any kind of weakness, because Ford is not in this business as a specialist. They're not in the electric car and truck making business. If any of that happens, we might see a scenario where the stock will drop in value, and maybe if the company doesn't turn a profit, because it's not yet profitable, Ford is not making a profit right now. If the profits are delayed by a year or two longer, maybe the bonds I'm holding, which pays zero interest, might get downgraded by the S&P people, the ratings agency. Now, there are certain pension funds and bond funds and ETFs that cannot hold a certain class of bond or lower. So if this bond drops into junk status, they have to get out. They got to buy insurance against it. Normally, the insurance is a percentage of the interest you're getting. It's a zero interest bond. Now you're paying money to protect your money that you're getting no money from. I mean, I don't see that. I'm having a problem here. And as a shareholder, I might have a problem with it. I might not have a problem with it. I guess I'm going to sit back and say, all right, well, okay, Ford has $2 billion in this bond going out. They might issue more series of these, because if they sell out, why wouldn't they? I'd do it. I mean, if I have a corporation going, you mean to tell me I can raise money for people for free? And all I got to do is offer them stock from my treasury at 40% higher than we're trading at? Let me think about this for a nanosecond before I say, yes, I will do this deal. Yeah, sure. Let's do a second series. And then a month later, we'll do a third series. Let's raise $10 billion, $2 billion at a time every month or two. Yeah, why not? Free money against inflation. It's actually, you're giving me money to give it back to you. It's incredible. Yeah, I take that deal. But as a shareholder, I'm going out here, okay, wait, whoa. I own stock in this company. I have votes, theoretically. And I'm the last guy to get paid. The bondholders, even though they don't get interest, they will be paid back first on their principal if the company's ever in trouble before I see anything. So I understand that my company is borrowing money for free, but they are borrowing this money. They're not issuing stock right now, right here, for free. This is free cash too. If they issue stock from the treasury, you don't have to pay interest on any stock you issue from the treasury. That's free money as far as interest rates go. You're diluting the company, but you know what? The company is raising cash. It doesn't ever have to pay back. It's not on the books as an IOU or a liability. Where a bond, you issue a bond that you owe that money. Maybe it didn't cost you money to rent the money. It's not costing you anything to rent it, but you got to bring it back with in the cash format. So the shareholders might be going, geez, these guys issue tranche after tranche after tranche of these kinds of bonds that are convertible into our stock. What does that limit us? Because if the shares go up 40% from here, there's no further growth in the stock potentially. Because what happens if $10 billion in bonds can be converted into paper? At that time, a year or two from now, our stock won't go any higher. Because the street, why would the street pay more for our shares that we're trading than what the bondholders are? There's this massive grand piano hanging over the sidewalk, okay? And it's on a rope. And at any time, the movers could cut the rope and the grand piano can come falling down. And I'm a shareholder down there going, I got this. I'm not going to walk onto that grand piano. What am I crazy? Put up those pylons and I'll walk around it. This is kind of what I'm wondering about. Okay, it sounds good, you guys. You're raising this cash, but for shareholders, you might be limiting their upside. Same with DraftKings. Maybe the high of the stock will only reach $92 a share, and the street will just not be interested in buying it anymore. Maybe analysts will go, yeah, DraftKings issued 1.1 billion of bonds back in March of 2021, and then in April, May, they did another billion, and in June, July, they did another billion. There could be it's unlimited. I mean, we have no idea. It could be $5 billion in bonds hanging over DraftKings at $92, $94 a share. It's stock 68 to 72. It's had a great run from $10. I kind of wonder, are other companies going to do the same? Is this going to retard the growth of the stock, the ability of the stock to reach higher capital gain figures? Yeah, I'm wondering about that. So this is, this is the old guy, 65 years old, who's apparently, according to some critics out there, so out of touch. He has no idea what's going on. He doesn't know. He's just a shill. This old shill. I'm asking, is this a good deal, really, or would they just be better off issuing? Why don't you just issue preferred shares? Convertible preferred shares of DraftKings and Ford that will trade separately on the equity market, that come with a 1% yield, very low yield, 1%, and are convertible into stock. And they're convertible for the first 2 years. Let's say the first year you can't convert it. First year you can't convert, you have to hold it. And at the end of the first year until the third year, you can convert it into stock of DraftKings for, say, 10% more than it's trading at right now, or 15% more than it's trading at right now. So let's say it's $70 DraftKings. Add 15%, $10. So it's convertible at 80. So for 2 years, you can have it at 80. And then beyond that, it's convertible for 2 years at 90. And then for 2 years after that, it's convertible at 100 for whenever. But at any time, the company can call in the stock, anytime. So if in 3 years, DraftKings are making a pile of money, they can call the stock in and say, under the deal, if you converted right now, you could convert this bond into stock at $90 a share. We're forcing the conversion. Here's your money. I mean, here's your paper. Here's your paper at 90. The preferreds now become commons, because that's the deal when we issued it, that we issued it at. But the upside for the preferred shareholder was that they're getting a yield of 1%, okay, convertible into common at a reasonable rate, not like stupid. And it goes in stages. It has its own liquidity. It's a registered security. You can buy and sell it anytime you want. You can write options against it because it's convertible into stock, and the brokerage firm you use will recognize that, yes, you have so many dollars of this preferred in your portfolio that it could equate to, I don't know, 1,000 shares or 500 shares of the company. You can write 5 contracts. It's a covered call. Yeah, sure, you can do that. So you can bring in extra income. You get called, you convert the note out, deliver the stock, cash in, and move on, of course. So there's flexibility there. As a bond investor with zero interest, you're subject to the rating agency, you're subject to the success of the company, you're subject to 40% conversion rate, which is, could never happen. You might never be in the money. We don't know. And you have a limited market with where to trade it, because it's not on a publicly traded market. It's the bond market, and that just goes, interest rates go up, this bond goes down. It's a zero interest paying bond. So if rates go to 2 or 3% in the next 4 or 5 years, these zero interest bonds, they're going to be trading at 20% discounts. This is not good. So you want to talk about an economy you want to talk about a market that's frothing? Maybe this is an example of how much money is floating around out there and how little you have to offer people to get it. It's quite surprising to me. Again, I've never seen this in my career, because when I started as a broker in '79, a car loan was 15%. Credit cards were 24%. Car loans were 15%. Personal loans were 14%. Mortgages were 12.5%, 13.5%, went up to 18% the next year. By 1980, we had interest rates of 4 or 5% higher. That was normal, and we had 12 to 15% inflation. That was the world at that time. And your landlord would send you a letter every 6 months or every year telling you your rent is going up by 10, 15% a year. And you paid it because you got a 10% raise last month from your employer, because you're getting 10%, but you're paying 15% more in rent. You're losing, but you're losing at a 5% rate, not 15. For those who were on minimum wage back then, they were getting crushed. And it eventually caused a major recession in Canada and the US and the world. High interest rates like that are not sustainable. Neither is high inflation like that. But eventually it calmed down, and we got back into the 7-8% inflation rate, and then we got it down to 5%, and it took years, but it happened. I don't know how my parents made it. I don't know how my parents did it. They had 2 retail businesses. My dad had a house with 3 mortgages on it. I don't know how they did it. I don't. The older I got, the more of a genius I looked at him and go, this guy's a genius. I mean, he had 3 kids, a house, and 2 retail businesses, and in 18% interest rates. How did he do that? Wow. Yeah, incredible. Now here we are today with 1.75% interest rates, and the market is freaking out. It makes us old timers laugh because we're going, you kids, you have no idea what inflation really is. You have no idea what interest rates are. You don't know. But it's all right. It's all right. We're all in the world we're in. I'm in this world today. I was in that world back then. And 30 years from now, when I'm long gone, you guys will be in the world you're in, wherever it's going. And you'll reflect back on your youth and your parents' lives, and you'll go, how do they do that? That's just it. The evolution of life continues on, and I welcome you all to the show. Amazing. We are 30 minutes from the opening, and the Dow is showing a drop of 6 points. I'm not worried. That's okay. S&P down 26 points. NASDAQ showing a drop of 224 points, 1.7%. And that's kind of where it's sitting. Don't know if this is going to be a serious wave of selling today because there's a lot of cash coming in from the stimulus. So I don't see this as a problem. GameStop, $216.15 is the price of GameStop right now. This morning, it was over the 220 mark for a while, not a long while, but a little while, a couple of times. But it has been mainly between 215 and 218, 219 has kind of been its range all day. The volume on GameStop, 242,000 shares. So it's telling me that those of us, and a lot of you who've been sending me information that you've uncovered about the idea of the delivery, the failure to delivery controversy and problems. You've been telling me about this and how this is being enacted by the SEC, this new policy and all that. It's not having an effect on the pre-market, I'll tell you that. I definitely don't see it. Will it have an effect first thing in the morning when we open for trading? Maybe. We'll find out when we get there in 28 minutes. But on the pre-market, I'm not showing any panic of people needing to buy or sell. And I've seen, obviously, no news from the company. I don't expect any news from the company until next week when they, on Tuesday, release their financials for the year. And we'll have a conference call to talk about their game plan. And so there'll be a lot of news then. Friday, tomorrow, is option expiry day, quadruple witching hour. We'll see what happens with all of these stocks, whether they're meme stocks or not. There will be a lot of activity coming up. We'll follow that. AMC is having a very good morning this morning. $14.13 is where it's trading at right now. It's up 57 cents on the day. The shares a few minutes ago were down to $13.91, but they've snapped back about 20-something cents, 25 cents, so that's good. Hey, I'm happy for anyone who's long AMC. This good, great. I would really like to see it go to $15 to $17. That would be reassuring. It has sort of had a bit of a resistance level a few days ago in the 14.35 something neighborhood. It didn't seem to be able to break higher. Just double checking here. Yeah, I noticed here on Monday when we had the breakout, it got to 14.45 or something like that. Just for a moment, a lot of trading around 14.25, 14.35 in there. And then yesterday it was in this 13 range almost all day. And this morning pre-market, it has bumped up over 14 a couple of times for the most part. So cross our fingers. A volume 2.1 million, very light. That's a good thing maybe, because being up 59 cents on only 2 million traded, that's good. Telling me there's no desperate wave of sellers trying to get out of AMC right now. I will admit though, there aren't like 100 million shares wanted by anybody. It's only traded 2 million, and it's up 61 cents. No, 14.17. So 61 cents. So on the one hand, it is up on thin volume, which is good and bad. Good, because there's no selling. Bad, there's not heavy buying. But I will admit this, maybe there just isn't any stock to get. Maybe that's why there's no volume. Maybe it's now inching up here in the pre-market as we're coming into the last 25 minutes, because there is a big demand wanted and there just isn't anything for sale. I'm hoping that really is the case. If that actually is the case, when we do open for trading, there will be liquidity. There will be a stock available, because certain firms, brokerage firms, only trade during market hours. And so we'll certainly see volume. The question on everyone's mind will be, yes, in the first 30 minutes, is there going to be, are there 10 shares wanted for AMC versus every 2 shares available? It's a 5-to-1 ratio, buy to sell. If it's a nice high start to the morning, we'll justify this price here. It might justify a $14.50 price. Maybe it'll even reach closer to $15. Fantastic. To get to 16, 17, though, this stock is going to have to move tens and tens of millions of shares, because you're rolling over the day traders, which is part of the game, of course. They add liquidity, but they also get in the way. You might be battling short traders who are short sellers who are going to try to keep the market in this range, or try to offload stock thinking that in the high 14s and in the 15s, this is the perfect place to take an exit strategy and look for a pullback at, between 10 and 12. Again, it's just people making money, nothing personal. People just trying to make money. They make money when it goes up, and they make money when it goes down. They make money when it moves, and this thing is moving. So we'll see what kind of volume is wanted, and see what the sustained pricing will be. But so far, looks great. 62 cents on the gain for AMC. Fantastic. Let's hope for the best. On AMC, like I said, 247,000 shares. But, if you take this stock price and compare it to the $14 AMC stock price, that's about a 15-to-1 ratio. It takes 15 AMC to equal one of these. So if you multiply 248,000 shares, call it 250,000 rounded out, times 15, this stock is trading 3.75 million shares, equivalent of AMC. So if this is it's out trading AMC in a dollar value way. And if you equal the stocks out to the same kind of pricing. But that's thin for both of them. Both of them are thinly traded this morning. It's the point I'm really trying to get across. So we'll see. The Dow just turned positive a few minutes ago, just as I'm talking here. We're now plus 7. S&P down 24. NASDAQ now down 213, down 1.61%. So a slight improvement on the market. Good to see. Again, we're gonna see what happens. Unemployment claims jump to 1-month high of 770,000 as Texas applications surge. So no surprise that Texas unemployment applications would be up because of the power problems and all the problems since. The other side of it is perhaps Texas will now rebound with employment, because all kinds of homes and businesses have to be repaired, and a lot of workers hired to enact that as insurance claims go through and so on. So that's an update that's breaking. That's good. We'll see how the market wants to react with all of this news. We got a number of things going on. The other thing I wanted to talk to you about today was the threat to the U.S. economy that is out there, that is slowly but surely being talked about more and more as each week goes by. And that threat could be something as boring as supply chain problems. We're beginning to hear about supply chain problems. Johnny, by the way, thank you. Hi, Bruce. I wanted to bring your attention, but during the SEC hearing yesterday, they confirmed many conspiracy theorists' suspicion the hedges were using shorts to hide FTDs by shorting more. There you go, Johnny. Waiting for the fallout of that to hit the market, aren't we all? By the way, Randy, I saw you joining as well. Also, I saw Dave join. JL, Uncle Bruce, how do I get one of those shirts you have on right now? Well, this is a sweatshirt. Just go to my Redbubble store. Go to my official Redbubble store. There are fakes out there who are selling this logo, pretending to be me. So make sure you're buying from Bruce Frommert. Go to Redbubble on my homepage. You'll find the logo, or down below in the description of this show or yesterday's show, you'll find the Redbubble link, and you'll find hoodies in different colors, all kinds of T-shirts in different colors. Here's this T-shirt I'm wearing under here. Men's, women's sizes, you name it. Knock yourself out. Thank you, everybody. This is nice and soft and warm. It's great. I love it. Thank you, JL. That's how you do it. Again, thank you, those of you who've become members this morning. I've been obviously yapping on and past your notifications, and I appreciate all of you joining the membership. All right, supply chain problems in America. This is an issue that is beginning to rear its ugly head. And what am I talking about? Well, Ford Motor Company, just go back to Ford. They've stopped F-150 production dead in its tracks. They can't get enough computer chips that they're using inside the truck. They are using several systems now. You know how complicated these new vehicles are. I mean, my God, it's unbelievable. But Ford is having problems. There's rumors that other manufacturers are having problems. I think was it Westinghouse or Maytag? They were having issues because of the computers in their washers and dryers. A chip shortage is a global problem, and it is that's just one of many issues that are beginning to pop up right now. We're beginning to notice that. What is your thought about the outcome of Texas Energy Company? Man, Texas is a mess. Texas is a bloody mess. And I'll get to that later. The deregulated market over there, it's a free-for-all. And I don't know. Unfortunately, the solution for Texas will be what they don't want it to be. And it'll be government having to step in to fix it when Texans are so anti-government involvement in their lives. And yet you don't regulate something. Guess what fouls it up? The competition fouls it up. And a once in a 100-year storm, sure, can foul up anything. Well, this one fouled up big time. And the billions, if not hundreds of billions of dollars of lost property values and productivity that could reach $1 trillion for Texas for years has not yet been added up. And this is the price you can pay if you don't have insurance against an unregulated sector that is critical to your infrastructure, like electricity. How basic is that? And the insurance policy is you have a government oversight to make sure that these guys who are in it for the money are being held accountable. And they weren't, and they didn't have to be, and no one made them do anything. And now here you go. Again, but the free enterprisers out there will go, that's not the solution. The government is not the solution to all our problems. Okay, all right, good. Cough up $1 trillion in lost productivity and property damage and layoffs and everything. Go ahead. Just fund the issue then. Fund it. Don't come crying to government to bail you out now. Fund it yourselves. It's free enterprise. It's yours. You own it. You own it. Enjoy it. Anyway, that's just this old man talking, and you don't have to take me seriously. Supply chain problems. Texas, classic example. There are going to be supply chain problems out of Texas. Certain factories are not running at 100% right now. Most successful businesses in the world today operate on what we know as just-on-time delivery. So car plants in America and in South Korea and in China and Europe, everywhere around the world, car companies, airline manufacturers, appliance manufacturers, computer makers, it doesn't matter what you are, they have parts coming in from all kinds of suppliers all over the world, because it just isn't done anymore in the old days, where a Ford Model T, every single part of a Ford Model T was made in the factory that Henry Ford built and was assembled in his factory, and the car was driven out to the back of the factory one every 10 seconds or whatever that rate was when they delivered 20 million Model Ts. Every part of the Model T was made by the Ford Motor Company. You buy a Ford F-150 today, and you want to tell me where the parts come from for that truck? They're not from the Ford plant in Dearborn, Michigan. They're not from any Ford, all the Ford plants that Ford has in Ohio, in Canada, in Ontario, or other states. No, there are parts from Mexico. There are parts from China. There are parts from Korea. There's parts from everywhere. Same thing with other products around the world. And this supply chain interruption is happening across the board. And it's because of weather. You get these storms that you guys have had in the U.S. this past year. I mean, the United States, in certain areas of the United States, you have experienced weather in the last 6 months that you've not seen in many, many, many years, or certainly not as severe as you've seen in the last 6 months. Some of these winter, these cold freezes, like Texas, the cold freeze, the blizzards, the ridiculousness of it. Well, this is screwing it up. This is screwing up everything. And so there are trucks on the road that are delayed. There are ships delayed getting into ports. There are ports delayed getting containers off the ships, getting the containers onto rail and onto truck. And then the distribution thing is there's interruptions. And that doesn't sound like a big deal that, the parts arrived a couple days later. So what? Well, so what? You've got companies out there trading on the stock exchange right now. Their shares have been priced to perfection. Perfection, which means at every level of a corporation's execution plan, it's all working out. The first thing they had to figure out was, how do we stay in business if we can't have our people come to the office? Well, they figured that out. Remote working. It's incredible. Hats off to all of you out there who work from home or who work remotely, because the company you work for has continued on. Your checks keep coming in from work. Way to go. That was the first hurdle. The second hurdle was, how do we design new product, market new product? How are we going to do business without going to trade shows? Because we used to rent booths at all these convention halls around the world to show off our latest product. What do we do? Well, you do Zoom calls. You now do the Zoom presentations. You're doing one-on-one virtual reality. Teams of 5 people from a corporation are on the top, and then the 15 customers are down below, and it's the big presentation. You're making videos of your product line and sending videos out over line to the prospective buyers, because the buyers aren't in their offices either. Yet they need to buy merchandise for their retail operations or their online operations or what have you. And so we've all adapted and adopted that. Well, that's great when product doesn't have to physically move between point A and point B. And the other issue is when you have an assembly plant at point A, and you've got 10 locations where parts come from, either in the same country, state, or in countries around the world, you've got to be able to get all of those parts into this place from all the locations on time, every time. And one part doesn't arrive on time, screws it all up. It could be one of the parts that goes into the chassis of the item you're building right at the beginning. You can't build the rest of it because you can't build the beginning of this thing. It might be in the middle of the production line somewhere. That part isn't. You can't keep building that vehicle or whatever you're building beyond this point without this part coming in now, because you're not going to be able to get in there and install it later because other pieces of this machine are being built all around it. This is a massive problem. And you go from there, from the factory problem to the next level, and that is, you move your product from your factory by truck or rail to distribution centers, and you have made contracts with shippers years in advance on a volume basis. You have committed to a trucking company that you can bring 20 trucks a day into our loading docks, because we'll have 20 truckloads of stuff every day that's got to go out. The trucking company has taken trucks away from everywhere else to satisfy this contract. They got their employees all lined up. They got the rigs all lined up. And now you're not delivering. And these guys are sitting idle, and there could be penalties. You might still have to pay these guys, even though you're not using it, because they can't go anywhere else. They've locked into you. Then you've got the retailers at the other end, or wholesalers and suppliers. You deliver product by truck or rail to wherever it's going. Those guys aren't getting the merchandise that you've agreed to send them, that they've agreed to store or reship or unpack in bulk and repack in pallet loads for local distribution. They're all sitting idle. And then it's the retail stores, if that's where it's ending up, they aren't getting their merchandise that they ordered last year from you at the trade show. You're not delivering the stuff. And some of these end retailers are publicly traded companies like Target, like Walmart. and Costco, and they don't have product on their shelves. And they've promised Wall Street, we expect our earnings to grow at 3.6% this year because we've pre-ordered all of our merchandise. We've set up our stores for all this product to come in. We know what our customers want. We've printed all kinds of flyers, and we've done all kinds of advertising on the internet to our loyal clientele. And they're coming in here expecting to be able to buy product X for $399.98, which is $50 off, because we got a promo on it. We ordered 20,000 of these things across the country, or 50,000 or 100,000 at our 500 stores, and we don't have it. And this is the down the chain problem. It just keeps going and going. So people show up going, that old washer of mine is on the last legs. I'm finally getting this new Maytag, blah, blah. It's not here. When is it coming? We don't know. Dang. I'm going to Home Depot. They don't have it. I'm going to Lowe's. They haven't got it. Dang, I can't find this darn thing. You've got contractors coming in going, I'm building a subdivision here. I got 50 houses going up, just-in-time delivery of everything for the house. I got all kinds of problems with that, but at least my appliances arrived. Dang, they didn't arrive. Now I can't build out the kitchen. Dang, can't sell the house on time. Dang, we got us a problem. Yeah, we got us a big problem. This is the beginning of a massive domino effect of an economy that could be in big, big trouble. There's a demand for services. Yep. There's a demand for merchandise. Yep. There's a problem with the system from point number one just to the assembly point. This is the issue. Don't forget, too, there are factories that provide car parts to Detroit to be installed in trucks and cars and whatever else. These factories, they create product like maybe dashboards or seats or whatever the parts are. They create product from 25 suppliers that they have around the world. And they're all having supply issues themselves. It just goes on and on and on. There is no car made by one factory anymore from beginning to end. Doesn't exist. And it's the same with most merchandise. Most merchandise, exactly the same. So it's not just a computer chip problem. It's way more than that. And coming back to the computer chip problem, there are companies out there that are logistics companies that are trying to figure out the logistics of just-in-time delivery for all of their thousands of clients with all of their thousands of part suppliers. They can't upgrade their logistics computers and software because of the computer chip shortage. It comes around and around. Not only the truck can't be finished at Ford, the company that's figuring out how to get all the parts for the Ford company for all the parts they need for the truck, they can't figure their act out because they're short of chip too. And this is just going out exponentially. And I mention this to you today because you're gonna hear about this a lot more. I want you aware now. I'm trying to get the blinders off and go, oh, geez, this pandemic isn't as simple as, hey, just let us go to our favorite restaurant and just let us go to our gym and let the kids go to the mall and everything will return back to normal. It'll all be fine again. Oh gosh, no. This is so much deeper. The layers of problems that have to be resolved. And one governor in the US opens up the economy, another governor keeps it restricted. A country like Italy shuts down again. There are hundreds of thousands of factories that are not producing parts, that are not being shipped around the world from Italy. And there's no one else to replace it in a week. You can't go to someone, oh, you replace this part, you make this part. It's not happening. And if there's restrictions in France, in the UK, and in Germany, and in Spain, you're talking an entire continent. That's like a USA off the grid. China is gung-ho, full, let's go. They can't produce their parts either because they also import and export everything they're about. They're into the global economy. The United States, has been the leader of this whole global thing, and everybody else is part of it. And so these markets are at record highs because of record high expectations by analysts and stock players that these companies who are parts of these indices will deliver it on the bottom line. And some companies will, and some companies might not. And it might be a surprise to you when you find out, oh my gosh, I didn't think that company would have a problem. I thought everything was fine over there. They got orders up to here for a product. I mean, they can't keep up. Though that's the problem. They can't keep up. And if some companies are 1 or 2% off of their targeted cash flow, expected sales going forward, the analysts will cut the forecast of the stock by 20, 25%, just like that. Because the stocks are priced to perfection. They have got to execute on every metric to deliver. And this is why I warn you about certain things like this that could come up and bite us and nip us from behind. Had no idea that was in the bushes. I was just walking down the sidewalk and that thing bit me. I didn't know that was there. Yeah, because there's hidden problems that we're not necessarily familiar with that are, I think, in the next few months going to rise to the surface. We're going to realize, oh my gosh, have we got issues? It's going to take a year or two, maybe 3 years to really get through it all. And by that point in time, every item ever manufactured is obsolete. Because again, I'm holding this brand new 1.5 year, 2-year-old iPad. It's brand new. I haven't even dropped it yet. It's so new. I hope I don't drop it. It's obsolete. It is obsolete this fall because Apple is bringing out a new one. Can Apple build them? Because they're not made by Apple in the US. Apple doesn't have a factory. They don't own factories. Apple leases factories overseas. And they hire labor overseas at much lower prices than they would pay in America to import these gadgets that we love so that they can maximize their margins. It's not like they're offering this iPad at $300 or $299. This top line unit, one of these new ones now, it's probably $1,200, $1,300, costing them $100 to make. But the logistics of making that $100 product has to be perfect. All the parts coming from all these other manufacturers to be assembled by these wage workers that, Apple would never consider building a factory in California to build this product. Not a chance. And yet they're one of the most beloved American companies out there. Which I find the irony of it all is how we love Apple, but they don't create the jobs they could be creating in North America. But then again, they'd have a lower profit margin. The unit will still be $1,300 for us to buy. We'll never get in a price cut. It's just a question of, do they make $1,200 a unit or do they make $500 a unit and pay out wages to North Americans with benefits? It ain't going to happen. Just want to let you in on that. Thank you for being here today. My rant is over. We're about ready to start. We'll keep an eye on the markets. I want to get to your comments and questions. Thank you for being here. GameStop 215 on the pre-market, 296,000 shares, just as quiet as can be. What does that mean? Well, we're going to find out real soon here in about 2-3 minutes when we open up for trading. And we'll just see what the market gives us. The Dow is negative again. It's down 40 points. S&P down 29. NASDAQ down 230. Those are the markets. The Philadelphia Fed's Regional Manufacturing Index surges in March. That's great, but if they have supply issues, that's not going to last long. U.S. weekly initial jobless claims climb, but ongoing claims dip. So mixed indicators, but the market is not happy. The Dow is negative on whatever pre-market news is circulating. The Dow is just not thrilled. It's only down 0.13 of a percentage point. I mean, it's no big deal. But the indication is I'm not excited here. S&P down 0.75%. NASDAQ down 1.73%, down 228 at the moment. All right, that's where we're at. Let's take a look at our friends at AMC coming into the opening. It's $14.35, up 79 cents. Fantastic. Just go, please, AMC. Please go. They're talking about almost all of their theaters being open by March 26th. And I just hope nothing else happens. I only worry, of course, about these variants. Are these variants going to come up and close certain areas? And the one I worry about the most is the Northeast. New York, Pennsylvania, Ohio, New Jersey, that entire Northeast region where a ton of people reside, and where Hollywood really counts on folks to want to go see shows. We have to hope that there isn't a new set of closures, because if that takes place, AMC will be quickly down to 60% of their theaters open, 40% closed, and with one hand tied behind their back. It just causes cash flow challenges, because they can't show movies outside. You got to be able to go in the theater, man. You got to sit on those seats. You got to be able to get your popcorn, and people have to have the confidence to want to go into a theater with 300 or 400 other people to watch a show. This is what it's all about, and I don't know. I think we're open. Are we? Yeah, we're hitting the bell here. 209 on GameStop. Initial indication. Let me see. No, it's 214.99 initial, but now 213. We'll watch this closely on the New York Stock Exchange. Volume at 400,000 as a starter. Very small and slight opening. We'll watch this closely in the first few minutes. AMC up 64 cents at 14.20. And I'm glad to see that. And I hope there's some good follow through. I know a lot of people are into AMC between $16 and $18 a share on average. And you still need a couple of dollars to be even again. And I'm hoping this happens sooner rather than later in a big way. And if the stock could go beyond that, even better than that, that would be absolutely fantastic. All right. There's been other talk lately about the markets, and I wanted to mention this as well to you, because people are asking me, what do you think about this, Bruce? What do you think? I get a lot of you send me private emails, which I really appreciate, and you send me articles that you find, or information you find. You're asking me, you want to look into this and maybe comment on this. One of the items people are asking for a comment on happens to be about the talk out there that Robinhood, the brokerage firm Robinhood, was taking orders from its clients for stock, and including GameStop, and that the Robinhood people were actually not buying stock for buyers of the company. What they were doing was that they were in effect filling customers' orders by technically shorting stock to them from an inventory position. Because the thinking was, and again, this is speculation by people out there who are asking me this question. The speculation as well, somebody wants to buy one share, somebody else wants to buy 2 shares. Here's a guy who want to buy a half a share, 3/4 of a share. All these little orders are coming in, and Robinhood is just taking all the orders with their computers. They're just bringing them in, and then when they get to 100, they have a board lot. And the thinking was that they give the customer a fill for their buy order within the market of the range of the market. But they assemble 100 shares or 500 shares or 1,000 shares. They're shorting it because they're selling the stock to the customer, and they now need to buy the stock on the open market. And the thinking was that we'll give the customers their 100 shares, and 40 customers are getting their 100 shares, and we'll then buy it on the market for maybe a nickel less than what we sold it to them for, and we'll score a nickel on 100 shares. Times 1,000 shares, times 10,000 shares, times 100,000. You multiply it out on all the stock that they're handling. So you add in AMC trades, and add in Bed Bath & Beyond trades, and the BlackBerry trades, and the other meme stocks that were just going nuts. Right? We had 200 million shares a day trading in GameStop, of which maybe Robinhood might have done a third of that, a quarter of that, 50 million shares a day. Well, if you can scoop 3, 4, 5, 6 cents a share on all of that action, that's good money. But if the stock keeps going up faster than you can assemble and buy and lock in, you might be losing on every trade. And what could have been happening, and this is the speculation, is that while the shares were in the $20, $30, $40 range, they were doing this, and they were easily able to buy the stock on the open market, and do their transactions and scoop their pennies and nickels and whatever. But when the stock went from 40 to 80 in like one day, and then 80 to 120, and they were getting millions of buyers, they were shorting stock. They began to think, well, come on. It was $4 to $5 for years. It got to 10, which is cute and all, quote Lorraine Banks from Back to the Future. He's cute and all, but when it took off, they were shorting stock, thinking, well, this is temporary, and they'll just come back and we'll buy it back and we'll be fine. And when the shares got to 80 to 120 to 200 to 250 to 325, I mean, Robinhood was theoretically short a ton of stock. And I'm missing a word in front of the word ton. They were short a blank ton of stock, big ton. Megaton. That's what it was. They were short a megaton of shares as it was going up. And they were using house money to cover the shorts. And they were honoring the buys for their customers. And then the customers were selling, and they were honoring the sales, but they were carrying a short position. And maybe, quote unquote, is that why Robinhood had to come up with $4 billion in 2 days to cover their firm's liabilities? Because why else would they restrict anyone from buying stock? Why couldn't you buy GameStop through Robinhood when it was $400 a share? You couldn't buy it at $350. You couldn't buy it at $300. You couldn't buy it at $250. It went all the way down to $112, $125 one day, bounced back to the 200 range and went back down again. You couldn't buy it for the longest time. And then when you could buy it, they let you buy one share. Then the next day you could buy 2 shares. And the next day you could buy 5 shares. It took a week, 10 days? Why would that be? And now maybe we know. Maybe now we've put it together. It takes a while to come out. Maybe someone talked to someone at a bar one night and said, well, I'll tell you what happened. Oh, the office is going crazy. We're just going nuts over there. Maybe that's what took place. And I'm asking myself, how in God's green earth can this company go public? How can any brokerage firm sponsor this deal? Why would any investor want to invest in this outfit? Now, I will say this, just again, to throw it out there to all of you. I want to give you as many angles as I can on this. I'm not the judge here. I'm just reporting to you what I interpret is happening in a plain English kind of way. It's most likely other firms could have been doing exactly the same thing. That might be standard industry practice, that a lot of firms out there with their computer systems fill their customers' orders and then they deal with the actual trade later. Because most of the time, like Apple, it moves a couple of dollars a day either way, or like IBM, it might move $1.50 from high to low. And you put an order in for IBM, you're filled. You put an order in for Amazon, you're filled. No problem. They don't have any issues, no problems to handle your trade, to get you covered. You have nothing to worry about. It could well be that they were front running the market for the convenience of their customers with their own cash, and they got caught. They got caught with their pants down, and they got caught violently with their pants. I mean, they were really caught short with millions of shares they didn't think they'd be short in such a hurry, where the stock just took off on them. They had no way of thinking that the stock would go from 60, 80 to 400 in 3 trading days. No one did. No one. I mean, the dreamers and the hopers and the aspirationers, yeah, sure. But on the street, at the trading desk level and in management level, GameStop going to $500 a share on a pre-market trade in a week from 40. Come on, get real. I mean, that's the attitude. We're now at 214.29. There are people out there going, this is going to 5,000 a share. And there are people on Wall Street going, come on, what are you talking about? There are other people on Wall Street going, well, it kind of happened before. It went from 20 to 500. It could go to 200 to 5,000. Same thing. It's just in proportion. It can happen, depending on the buy volume and how desperate the shorters are and everything else. Now, if a brokerage house is shorting against this position, they were, as I was saying to you yesterday, and I've been saying to you every day, 3 weeks ago yesterday, could have been 50 million shares sold at $49.99 a share, so it wouldn't go over $50, and it went over anyway. Those 50 million that were sold, Armageddon is tomorrow, theoretically. Tomorrow is Armageddon. Have these guys covered in the meantime? Have they solved their problem? I would hope so. I would think they would have, but maybe there's still a bunch of stock that hasn't been solved. I don't know. Who actually sold the stock short? I don't know. Did Robinhood back then, when the stock was 49, and all of you who were watching me, a bunch of you were trying to buy this stock. You're buying it at $49.99 all afternoon, and you got a bunch of it. And then it broke out, and you're all happy. It went to 55 and 60, and one went to 91 that day. Were you buying it from a shorter that was a brokerage house? That's an undeclared short, and failure to deliver, and on and on and on it goes. And they were bringing money. They brought the money to the clearinghouse, and they covered the margin on the short. But now that it's at $214 and it went to $348 a week and a bit ago, at $348 they were down 7 times their money. Was Robinhood again underwater by $2 or $3 or $4 billion, but they didn't get a call this time because they have the money in the bank to handle it? Would it have been possible? And I'm just throwing this out there. These are theoretical what ifs. Do you think that it's possible that maybe a brokerage house attacked the stock when it was $348 a share and drove it down with market sell orders internally using house money to get it down to 172, and then ultimately it came to 280, settled at 260, and then a week later it's now 214, and they don't have a $348 a share problem right now. They have a $214 a share problem, and they're still upside down on the whole enchilada that they got involved with again, but they certainly aren't in trouble like they would have been at 348, and it could have gone to 448 and 540. I mean, the stock was on a roll, wasn't it? Could they have put the brakes on this movement temporarily by dumping stock, more shorting, undeclared, and just putting up the margin to cover everything? Could Citadel been involved in any way in any of this with a $60 billion fundraising deal they just did a few days ago? Is that part of this? People are asking me, Bruce, do you think the $60 billion they raised is covering their butts on the GameStop redo all over again, that they're now covered to 500 a share? They're all the way up to, they're now covered to that, and they're trying to keep this thing from going anywhere by just slamming any positive momentum on this stock. They're not going to let it happen. They're going to let it go up $20, and then they're going to hit it, and they're going to try to retard the movement on it because they have 60 billion borrowed reasons for this, and all their pals and clients who are short all over the street this stock are all doing the same thing because it's their survival on the line. Are we talking about 10 or 20 or 30 or 40 hedge funds out there that could be technically maybe not ruined, but badly damaged if this stock went to 500, 800, 1,000 a share? Are we talking about a $100 billion problem, a $200 billion problem? Remember, we're talking about the possibility of 200 million shares or more that are floating around out there where a company only has 70 million in existence. Are we talking about something like that, of that magnitude, that if the shares reached $1,000 a share, it's a $700 billion problem? How many firms are on the hook? Citadel raised 60 billion. They didn't raise 2 trillion. So I'm asking. I don't know. I'm sitting here going, man, oh man, I do not know what to make of all of this. All I can tell you is this morning it's at 214.29. And the volume right now, I see it now at 210 on my phone, but 214 over here. So maybe my machine is behind. 210 over here. Volume 1.4 million. There's no volume. There's no volume. Are there brokerage firms right now restricting the buys of GameStop? Do any of you? I'm asking all of my viewers. Let me know if any of you are encountering any problems where you're trying to buy stock of GameStop today or lately. Have any of you been in any issues with having any issues with your broker? They won't let you do it. I'm kind of curious if there are entities out there who are restricting buying access to GameStop because of the very nature of 5 million shares of buying power could pop this thing to $400 a share. I'm wondering, is that? I just want to know. I really wonder. I also wonder. There are hedge funds out there, and there are industry specialists out there who know way more than I do, have much more access to information than I'll ever have. Are there senior people in Wall Street or connected to Wall Street that know just how bad this problem is with failure to deliver, not only with GameStop, but across the entire spectrum of the market? And they also know that if they were to force the issue on a stock like GameStop and a few other select securities, where they were to come in there with house money, client house money, to buy up whatever stock they can get their hands on. In other words, to buy it as aggressively as we saw selling lately, where the stock would drop $100 in 20 minutes. Could there be buying that pops this $100 in 20 minutes with 5 trading halts, and then pops it another $100 again, day in and day out? Are there people out there who know that if they did that, if they allowed that to happen with their clients in some kind of an organized fashion, despite Congress's, outrage, do they know that they might cause a cataclysmic wave of bankruptcies or major liquidation problems with all kinds of their trading partners? Because after all, if you've watched the movie Margin Call, at the end of the movie, the manager hauls in all of his sales reps that are left because everyone else has been fired, and they're all being told that they have to liquidate their entire portfolios by 11 o'clock in the morning, which is in 3-4 hours. They had to get 93% of their portfolio out, and up to 97% would even be better. And they were all going to be given multi-million-dollar settlement, walk out the door settlement deals today if you accomplish this feat, because we've got to get out before anybody else can get out. This is basically getting out versus getting in. And he knew, talking to them in the speech that he gave them, saying, this is what you have to do. And I know this will ruin many of your careers, because many of your trusted trading partners at all these other houses will never talk to you ever again because of what you're doing to them this morning. Because we're going to be the first house out. We're the first house to get out, because if we don't get out first now, we're under by this afternoon. We're out of business. We know by getting out and doing what we're going to do, other firms will go under as well, or will be badly damaged, and we will all be tarnished with a brush of hate going forward. I'm asking the opposite. Are there hedge fund managers, presidents of brokerage firms, pension fund managers, hedge fund managers, ETF managers, who know that if they put in buy orders to take advantage of the problem that I think a number of firms are dealing with respect to GameStop being at $209 a share right now? If these folks came in here and just started buying up this stock and running it over the next 3 days, 4 days to $450 a share, that they know by doing that, they will cause $100 billion in damage to their pals, their fellow trading firms. On the one hand, they could run them out of business. On the other hand, they could steal the business from them. On the other hand, they would be tarnished with, you're an assassin. But their argument could be, hey, I didn't cause the short problem. I didn't use my house money and fail to deliver stock that I was supposed to do. I didn't do undeclared shorts. I didn't sponsor or encourage or help clients write naked shorts up to the highest level you could ever imagine. We didn't create this $100 million share short position on GameStop. None of us, we didn't do it. we're fine. And we are perfectly allowed at any time to go into the market and buy up stock. And if we find an opportunity, we're going to look after our clientele and do it, because we have customers who expect us to take advantage of weakness. That is the American way. That is the way of the market. Now, while I'm talking to you about all this, the stock's at 207 a share. So none of these guys are listening to me right at this second. Or if they are, they're writing things down and going, I got to talk to my buddy over at the other office. I got to write down what this Uncle Bruce is talking about. This guy's wacko. But it kind of makes sense. If we bought up 50 million shares of this stuff, or 10 million shares, where's it coming from? How can we buy up? If 10 brokerage houses each buy 2 million shares each, 20 million shares of GameStop, legitimately buy it to go long, where's it coming from? There's only 70 million out there. 20 million held by management, 50 million held by the street, and the street isn't selling because look at the volume. There's no volume. So if we step in here and just start nibbling at it, others will nibble with us because, well, if you're buying, I'm buying. I mean, that's what brokers do. This thing starts to run. Everyone gets in to the run. They all want to get in on it. And all these shorters out there are just going, oh, God, there's a stampede of buying. We can't stop this thing. The tsunami wave that is coming in is followed by another tsunami wave, which is followed by another tsunami, and these are higher than the walls we've built to protect our little village here in Japan. We are going to be overrun by this buy wave beyond what we could ever imagine. And so going back to Wall Street bets, there are people down there going, this stock could go to $100,000 a share. This could go to $500,000 a share. And they're right. Technically, yep. Realistically, the company isn't worth 208 where it's trading right now. It's not worth it. I mean, if they sold all their assets, they wouldn't be worth $208. However, the company going into an e-commerce platform and becoming that kind of a corporation, they can justify a higher price than this. They I think could be worth at least what Chewy is worth. Chewy is 40 billion market cap, approximately 40 billion. This company at $200 a share is market capped at $14 billion. So yeah, this company could be worth 2.5 times as much more than it's worth right now if it just matched Chewy's valuation. Chewy doesn't make money. They don't have the sales GameStop has. They're growing. They're getting better. They're a really good executioner. They execute beautifully. I can't get the words out. They execute beautifully on their business plan. They really do. Pet owners love Chewy. Gamers are going to love GameStop. They will. Maybe right now they're saying, oh, I don't think so. That's that old little brick and mortar company. I don't love those guys. You watch, you wait, watch what GameStop is going to do with their online presence. They're completely transforming this company. And within a year, the gamers are going to go, wow, these guys are like way better than they used to be. And in 2 years, the gamers out there are going to go, I go to GameStop every day to see what's going on. I've got to go there. It's gamer central. It's gamer central. That's where I'm going to go. Believe it or not, there are doubters out there who are laughing at me right now going, you're an idiot. You're an old man. You don't know. Okay, well, let's find out together, because if these guys can only match the value of Chewy and become a $45 billion market cap company with 70 million shares actually outstanding, we're talking $600-700 a share. That's what we're talking about. And I'll bet you a year from now, Chewy will not be a $40 billion market cap company. Now, I think they'll be much bigger than that, because I think they're about to turn into a profit scenario. And so Chewy goes to, say, 60 billion in value, let's suppose. Just guessing. This company becomes a $60 billion market cap company. We're at 900 a share now. It's 206 right now, 207 a share right now. If you buy it right now, and if there are big buyers coming in here, they will cause a short squeeze and a gamma squeeze and a failure to deliver squeeze, combine unprecedented numbers, unprecedented, never before seen in the market. I don't think so. This would be much bigger than the BMW Volkswagen thing that happened, and they'll be long lasting. This isn't going to be like a deal. No. This would be and then the company grows into the stock, except if the stock goes to 2,000 a share in the next month. then no, the company will not be able to catch the stock in its actual prospects. I'm thinking in a year, the company is 600, 800, maybe 1,000. I have guessed and I've speculated and I've wondered aloud if these guys in a year from now are perceived by the street as an e-commerce company, and they've got 8 billion in sales on an e-commerce platform globally, and they've reduced their store counts dramatically, which I think they will do all of this. It's a tall order. I know it's a tall order. But we've seen unbelievable things happen in the last year, like a pandemic that was supposed to wipe these guys out, and it didn't. 8 billion in sales online a year from now, a year and a half from now, valuating that company at 10 times sales, which wouldn't be unreasonable considering its growth prospects could be much, much higher beyond that. That puts them at 80 billion valuation. And that's 1,100 a share. And I've said it, I've put it out there, and people have argued and people have agreed, and others say, no, it's going even higher than that. Others say, no, it'll go at 6 times sales, not 10 times. Okay, but none of them say 205 is too much, 210 is too much, 215 is too much. They're all going, yeah, that could be higher. Now, right now, as I am speaking, the stock is under attack. It's now to 205.78. The question we have every day at this time, every day we go through this game, every day, are the shares being attacked because the shares right now are not on short sale restriction? So short sellers can attack any bid they find, any way they, as much as they want. They can hit anyone's bid and they can drop this thing. And are there hedge funds, are there shorters, are there brokerage firms that want this thing to print under $100 a share? Do they want this thing dropping all day today so that the options holders of call options that are holding call options that were written by naked option writers will not exercise their stock? Because if you can get this stock down to $100 a share today, it's at 201 right now. They can get it to 100. That means only contracts from $5 a share to 100 a share are in the money. All the contracts that were in the money until last week when it went to 348 are not in the money. Only the contracts for the current price of the stock. It's now 203 a share. That's question number one. Question number two, is this stock under attack right now because it closed last night around the 210 ballpark? And if it can reach 190, roughly, it'll be a 10% drop during the day, and the stock will go into a short sale restriction for the balance of today and all day tomorrow, which is the witching hour day. So, folks, if you want to buy the dip, the first thing you want to do, put in buy orders at 192, 193, just ahead of the 190. Put in all kinds of limit orders there. They have to fill your order to get the 10% drop. It's number one. Number two, if they go through 190 and then they go down to 180, you know they're trying to take a run even lower. Now you can put in buy orders at 161, 151, 141, 130. You might get it, you might not. And you're just picking up paper the lower it goes, and you're putting it away. The more you buy and put away, the higher the stock will go later. When later? Tomorrow, Monday, Tuesday. It won't take long. The short situation here is so amplified and so out of whack. I don't know if they're going to be successful in even getting this thing down much below 190. I really don't know. Right now, volume on GameStop with this drop of $6 a share from the high of 218. It's now 203. It's $15 drop. 2.2 million shares of volume. Nothing. There's nothing trading. There's nothing trading. There is no sell wave coming in here. If these shorters are dropping the market, hoping to scare people out, they're not following them. There's no volume. There's no one trying to get out in a desperate way with millions of shares because there aren't any shares to be had. They've been shorted. The stock market is flooded with possibly hundreds of millions of GameStop shares, of which only 70 actually exist. And everyone who's long knows that because they've been listening to me, other YouTubers, Reddit, the GameStop stock subreddit page, Wall Street Bets, We all know the game. We all know the gig. This isn't the first time it went from 20 to 500 in January. This isn't a repeat of that. There is an epic battle going on here between one force and another. And I'm speculating, and I know I am speculating with you guys that it is possible that there are some very large organizations who got caught with their hand in the cookie jar when this thing took off from 38.50 to 348 or whatever it was, and are now trying to put a stop to this. And they're going to risk their house money to do it. We're at 201 a share right now, and 199 right now. Just broke through 200 like butter, just went right through it. We drop this stock, like I said before, to the 190 range-ish, 188, it will be a 10% drop. That is possibly a very good thing. Believe it or not, the first 10% could be good. After that, it's a war of will. Will buyers say, you know what, at 150, you want to offload it here? I'll buy all you got. I'll buy more than you want to sell me. Maybe that number is 138. Maybe that number is 99.50. I don't know. I'm just here observing with you what's going on. It's at 199 right now, down 4.7%. Not enough of a drop to institute a short sale restriction for today and for all of tomorrow. 198. 10 more dollars and we're there. It's now down 5.3% right now on the day. And there is a war going on. It is big money, but the volume, 2.4 million. 2.4 million. I really wonder if the buyers are waiting. They're just going, no, hey, come on down here. We'll show some bids. Yeah, oh yeah, we got bids. But we're not going to show you millions of bids. We're not going to show you that we want millions of shares here. Not here. Oh no. We'll start getting interested around 195, 196. That's when we're interested, because now we got the 10% drop that we wanted, which screws you guys up tomorrow big time on the witching hour. You can't short it at will tomorrow as easily as you can right now. We'll let you hit it. Come on, hit it, give it to us. But once this thing hits 196, 197, 195, there could be a 20 million buy wall there. Could be. I'm not saying there is. If I were running a multi-billion dollar hedge fund, I would be the guy putting up that bid wall. Yeah, I'd be there going, okay, go ahead, come on, give it to me. Because now I got you guys. I got you guys again. We got you at 50. We got you at 120. We got you at 140 something. You played shenanigans after that. Now we're going to catch you again. And you guys are shorting down here. Watch this. Wait till it hits 400. You're down 200 a share from all the stock you're selling me today. Watch it hit 600. You're now down 400 a share for all the stock you're shorting me right now. Just come on, give me your best shot. I'm waiting. I'm here. Sell me all the paper you don't have. Sell me all the paper you don't have, because you haven't got it. We know where it is. The hedge funds and mutual funds tell the SEC, we got 130 million of them. That's how many we got. I'm going, really? How can you have 130 million? There's only 70 million out there. Oh, it's magic. It's magical. We're in a magical place because we've become Disneyland here at the New York Stock Exchange. It's magical. There's stock everywhere for everyone to enjoy. We're at 204 right now. Can't get the stock down. They can't get it down a measly 10%. They did get it under 200. 199 print. I saw it. I was here. I saw it. What's happening? What's going on? Do these shorters, do they have any idea what is about to befall them? Potentially. Is it a guarantee? Nope. No guarantee. Will this happen? This drop off today, tomorrow, Monday, Tuesday? These guys will keep selling relentlessly, no matter what Mr. Cohen says, no matter what the financials show, no matter what anyone is saying. They're gonna have, because they're upside down $50 billion. That's why, until they can buy back. But if people don't give them the stock at any price that they're trying to get it at, these guys are screwed. They keep shorting it to be able to buy more back, and they can't get it back because people aren't selling it at any price in any real way. It's just not coming in. And so you can't cover if you can't buy them. And eventually you have to start buying with everybody else. And now you've got to figure out, well, how much do we have to pay to get people to sell this stuff? I don't know. And at the same time, I'm asking you, do you think that they're buying call options in Chicago to offset their shorts and put the onus on those guys? Are they buying $50 calls, $60 calls, $80 calls? I don't know. I right now, if they're buying $50 calls right now, the cost of a $50 call that expires tomorrow or next Friday is 50 plus 155. It's a $205 stock. That contract is worth 155 book value plus premium till tomorrow or premium till next Friday or the Friday after, and so on. These guys are paying more than 205 to get the stock, see, but they can't buy it at 205 because no one is giving it to them. There's stock trading at 205, but it's hundreds of shares. A couple of thousand. Millions? No, not millions. Where are the 200 million a share volume that we had in January at these prices? Not happening. This is so much fun to cover. 2.8 million shares traded so far, GameStop, in 36 minutes. It's nothing for sale. It's nothing for sale. You can manipulate it wherever you want, and the sellers will not give it to you because they know. We know what they're going to do. We know what the corporate deal is. That's how I see it. No, am I wrong? Some will say you're way off because you were saying to the market how great this stock was when it was 348, and now you're telling the world how great it is at 205. You're wrong. The market has proven you wrong. The market doesn't lie. True. The market doesn't lie. Over time, it doesn't lie. It can be manipulated, and if the SEC lets it be manipulated, so be it. If the New York Stock Exchange lets a stock be manipulated, so be it. Was it manipulated when it went from $348 to $172 in 25 minutes with 5 trading halts? Yes, it was. It was being manipulated. Absolutely, it was. Were there 500 million shares for sale or 50 million shares for sale in 20 minutes? No, I traded million shares, 500,000 shares. That was manipulated. It was selling on a machine gun level. Just sell. Whoever's buying it, just hit them with the stock. Don't wait for a buyer. Just hit it. This trading halt was done. Came back. Sell. Halt. Open. Sell. Halt. Open. Sell. 172. Low print. And now the sellers are going, okay, now we're going to get 50 million shares of panic selling coming in because look at how bad the stock is doing. And it went to 285 an hour later. Oops. It went the wrong direction. As soon as they stopped selling, it went up. What was it doing this morning in the pre-market? It was 220. It was going up. No selling, went to 220. Selling right now of 2-point-something million shares, 2.9 million, it's at 202. It's actually down $7 on the day, which is down $17 from the high of the pre-market. That's what it's doing. This is the pattern since last week. We're all familiar with this game. We've been on this roller coaster now. We know every ride, every corner, every dip. We know the ride. We can ride this thing with our blindfolds on. We know. But we also pretty well, most of us all know the big picture for this company is not a brick and mortar future. We know that. And we're prepared to buy it here. You want to give it to us at 204? We'll take it off you. We'll take it off you at 198. We'll take it off you at 196. We'll buy it at 191. There's buyers just going, yeah, I'll just keep buying. I keep getting the emails going, the lower they take it, the more I want. I got stimulus money to buy this thing. I'll buy it. Yeah, I'm here. I'm here for years. I'm here. Yeah. Now, if it wants to go to $1,000 this afternoon, I might sell some. Okay, fair enough. But I'm here until it gets there. So if that takes years, okay. Takes weeks, okay. No, we're here. But you're not shaking us out. And a lot of these folks who own this stuff, they own it cash. They don't have margin accounts. So God help these guys. 205.35 right now is the stock price. 205 right now. Again, there is clearly, in my opinion, someone trying to stop this market and interfere with it. Clearly, whether it's from one house, multiple houses, this trading pattern here is clearly not normal, not natural. It's not natural. But it's legal. The SEC won't stop it. 206 now on the stock, another dollar bump. Volume 3.1 million. A couple 100,000 just came through in a few minutes. 206.37. The seller, whoever the seller was, may have run out of gas when it hit 199. Just ran into a buy wave that just overpowered what they had left. And now there are people here kicking themselves going, shoot, I should have buy order in there 201, like Bruce said. Dang it. And now it's 205, 206. Darn it. Yeah, well, that's the market. That's how this game works. Sometimes you get lucky and you score the deal. Sometimes you don't move on a deal and it passes you by. That is going to happen. That is how this business works. Sometimes you're a buyer of a stock and you've got to wait for it to come to you. You can't just chase a stock because you're desperate to get in it. Sometimes you have to be a patient buyer and let it fluctuate to come to your direction. And maybe there are buyers at 196 on this stock, or buyers of other stock 5 and 10% below where they're trading at right now, waiting out sellers to come to them. That market does fluctuate, as evidenced by the New York Stock Exchange, which is now up 33 points on the day. And the S&P, which is still down 26, hasn't recovered. And NASDAQ, which is down 241 and hasn't recovered. That's how this market works. Sometimes shares go up, sometimes shares go down, sometimes some go up, sometimes some go down. That's what we got, a mixed day right now where people are going, what's going on? I'm not sure. What's your conviction? There you have it. Anyway, there you go. Peter, thank you for this donation. Very nice of you. Also, hey, Bruce, I'm no longer upside down on UPST. Thanks for talking me down yesterday. I love you. Glad to help, buddy. That's good news. Peter Green, we might need to wait for company news to drive the price up if we don't get enough upward buying momentum. They won't get margin call unless price shoots. Walls are great for holding share price, not increasing it. That's true. That's true. I mean, if there are firms out there who are gauging how big a problem certain houses have, certain investment entities have, they could be sitting here going, we're just going to bide our time and wait for them to make one last shot at this thing. And then we're just going to trap them. We've got the flank over here. We got the army flanked over here. They're coming up the middle. They're going to come right at us. And when they come in the middle, we'll just close in on them from behind and we'll just nail them. Just like at Antietam and just like at Gettysburg. We'll shut them down from the sides and from the other end. That's how we'll do this. The GameStop shares can only go down if one thing happens. Someone sells more stock faster than people can buy it. That's the only way you can get the market to go down, is you gotta get them to, you gotta hit bids. Someone has to sell it to drop this market. Somebody. I don't know who that's going to be for sure, but there are firms out there who might be the ones. There could well be people going, yeah, we know they're coming. We know the army's just over there. We know they're there. They're all loaded up. They're polishing their knives and they're polishing their guns and they got their cannons all figured out. Yeah, they're going to start. They're coming. We know, but we're here. And we've got troops over there. And we got armies and battalions over there. We got backup over there. And we got all the bullets we need. And we're ready for it. We got more ammo than they've got ammo. They don't think we have as much as we've got. They're in for a terrible surprise. That could be it. Professor Sora, way to go, man. Thank you. Also, Gregory, thank you for joining me. Those of you who've been joining this channel as members today, thank you, all of you. I really appreciate it. I'm just so focused on what's going on. I don't want to take up too much time thanking people today. Uncle Bruce, can you tell us anything about dark pools? From what I was reading, Robinhood was buying stock late from dark pools instead of the market. There's a possibility that a lot of the trading that was going on, where people were buying stock through Robinhood, as I was mentioning earlier in the show, people were putting in buy orders to buy stock, and Robinhood was honoring the sales, sending out confirmation. You got your fill. You wanted 2 shares. You got 2 shares. You wanted 2 shares at $128. You got them at $128. You wanted them at you wanted to sell at $128.04. You're out at $128.04. They are filling orders, but the orders didn't make it to the exchange. The orders only went as far as Robinhood's computer system. Possibly, perhaps, maybe the orders only went from Robinhood to the Citadel system, to the other systems that they're using, whoever they're buying and selling to, the market makers. And they honored the trades internally without taking the order to the market. Because if they're small orders, they're inconsequential to go all the way to the New York Exchange. And so these market makers are handling these millions of little tiny orders all internally, all through their computer systems, and they're running up a tab as to their exposure. And if the shares are going higher and more people are buying and less are selling, they owe stock and they're shorting stock. And if the market goes lower and people are dumping and whatever, then they're unshorting stock. And so they're carrying this pool of a trading pool. It's like running their own little stock exchange on this one stock and only directing large orders to the New York Stock Exchange, 1,000 shares or more, 500 shares or more. I don't know the number. That could have been happening. Could it have gotten Robinhood into big trouble? Yes, it could have. Did Robinhood start to pare back this whole thing as quickly as they could when they realized just how out of control it was? Because when the stock hit $500 a share, could Robinhood have been short $10 billion worth of stock on paper? Yeah, they could have. I don't know if they were, but they could have been. Could have Fidelity been short? Could have Schwab been short? Could have all the brokers been short a ton of stock as it reached these unbelievable high levels that no one suspected on Wall Street was possible? And they put restrictions on the buy side. That is entirely possible. I still can't understand why a broker would not allow a customer to buy stock when they have cash to buy it. Can't understand it except for only one way and only one reason why a firm would restrict a client from buying stock. They're on the other side and they're upside down so big that their firm is being threatened and they've got to come up with emergency cash. It's the only way only reason I can come up with. I haven't heard the opposite argument to that makes me believe, oh, well, that's a good explanation. This so-called the clearinghouses increased margin on the stock and we had to protect our client crap is crap. It's complete crap. No way. How can clients be in trouble if their shares are up $500 a share and they bought them at 10? They bought them at 20. They bought them at 200. How can you be threatened if your account is worth 15 times what it was 3 days ago? I don't see the risk in your life. If you took a $2,000 account and it's now a $30,000 account, I don't see where you have a problem. I see where you have a wonderful day underway right now. It's been a good week. It's a great month. What a year. That's what I say. I don't know how a brokerage house would feel you're in dire trouble because a stock has gone that high. I just don't see that argument. And so I ask you, hey, what's going to happen? Right now, what's happening is the stock is at 207. And it is down 271 on the day only, where it was at 199 10 minutes ago. That's all. It was a lot worse looking. It's now 208.32, 208.59. It's down 58 cents on the day. They didn't get the 10% down dip. They didn't get the crash. Now, is it over? I don't know. I'm not sure. I can't tell you that. Well, how can I possibly know? I'm just a guy in a living room in Creston asking people to just try to like me. Try to hate me. I'm not hired by any brokerage firm or hedge fund to be here. I'm an independent guy just telling you what I see and what I'm interpreting. Volume 3.4 million. 3.4 million. Oh my God, this is so thin. Unbelievable. I'm blown away by how little is trading with what has been going on here, apparently. Unbelievable. By the way, there are 7,100 of you here, so thank you for watching me this morning, being with me, spending some time. Your valuable time, very much appreciated. 2,000 thumbs ups today already. I haven't even asked for them. Thank you. Of course, I'm begging. Please keep them coming. 161 thumbs downs. I understand some of you do not like what I'm telling you, what I'm saying about this market. You don't want me to be negative. You don't want me to be myself, or you think that I'm not being myself. You think I'm being somebody else, or I'm being paid to be somebody else. Well, I can only tell you that if you kind of stick around and watch me day in and day out, I think I'm kind of consistent with my approach. Love me or hate me, I'm just telling you where I see it and how I see it. Right now, I see the stock at 208.36 on GameStop. Now, our friends at AMC, how are they doing over here? 14.44. I'm so relieved to see 1444. I am so happy. You may not believe me, but I am really, really happy that the shares are there. And I'm praying that they're going to go a lot higher. I really am, that they're going to just keep on going. AMC, please go to 17, 18, 19 bucks, please. Oh, that'd be great. I don't know, but they are at 1443, and they've traded 43 million shares, which is light for this stock, but it is nonetheless 43 million shares of volume. Hey, who's going to poo-poo that? Not me. High of the day, 1454. Way to go, AMC. GameStop, 208.56 right now is where I see it. Not sure where we're headed next, but it looks to me like there seemed to have been a sell wave from the 220 range, roughly. We were there in the pre-market. We were at 217, 16 on the opening, kind of 218 on the opening, and it came back to 210, kind of went up to 211, 12, down to 199, now at 209, and it's off fractionally 208.82. So it's just jumping around here. Sorry, let me just get this there. It's down 99 cents, down just a tiny bit, but the volume is extremely light. And there's your Uncle Bruce trying to interpret what's going on for you. And I hope you don't mind how I'm doing it. You are awesome, Bruce. Me and my wife, we love you. Thank you, John. Your kind comments mean the world to me. I think you should be concerned with how the volume has dried up over this past week and today. I wouldn't be concerned about it. John, thank you for becoming a member. I wouldn't be concerned about this. No volume equals apes holding. Long live the apes. Yeah, people are not panicking out. They're not. You're not shaking them up. Even down to 199. We haven't been under 200 in what, a week and a half, 2 weeks. Got a 199 print. Where did the selling wave come from? It wasn't one. We didn't get one. We're now at 207, 208, 209. It just snapped right back. As soon as the seller ran out of bullets, and this was a small seller, 200,000 shares. I don't even know. I don't know, but it wasn't much. That seller got taken. They got purchased. They bought them, and now the street wants more, and there are no sellers to satisfy the demand to keep it at 199. It's now kind of 207, 208. That's where we're at. Like I said, is it possible that there could well be a firm out there that will take a run at this because they smell blood? Because that's how Wall Street is. It is merciless. Austin, thank you. Can you do the I want to rock thing again? Oh gosh, I'm so tired, honest. Austin, I'm exhausted, man. It's Akos, thank you for becoming a member. I don't know if I can do it. I can hardly move. I'm telling you, I'm just an old man. I don't know if I can tell you what I want to say to you, what you want me to tell you, but I just, come on. You got to come to me. I can't just come to you. I mean, I want to say in all sincerity, so that none of you miss this point, okay? You all get this the first time. I don't want to repeat myself, all right? I would like to say, I want to rock, okay? All right, did you get that? Okay, because I haven't got many left in me. It's been a long week here, and you gotta cut me a break, kids. Thanks for joining me. KW just posted on your Reddit chat a picture showing blatant manipulation, multiple orders of 59, forcing the price to stay at the 200 and 205 range. There you go. I'm not doing it. I'm not a shell. There's a subreddit page for Stock Market with Bruce. I'm here. I'm working here. I'm yelling at my camera. I want to rock. I haven't got time to post this stuff. Independent viewers are posting it, and I thank you for it. Coffee 44, thank you. Welcome all of you. Welcome all of you. Thank you. Here, ionized follow. Bruce spitting mad truth this morning. Keep it up. That's. I'm trying not to spit, but I guess I get to do it. RH Robinhood said they had a liquidity issue, but not from me. They only let me buy what I can afford by depositing confirmed funds. How could I be the issue? Exactly. How could you be the problem if you've got cash? You're not the problem. You're the solution. You've got money, but you're a problem if they're short. You're a problem now. 211 on GameStop. If you are buying stock with cash going long, you're the problem because they're selling even more to you. They're shorting perhaps against their clientele and got caught. Up $1.75 at 211 right now on the stock. Robert Hill, hi Bruce. Have you touched on the game post talking about how negative beta is pretty rare? GameStop beta negative 207 ATM at the moment. Robert, I can't. At the risk of getting criticized by other YouTubers who analyze what I do to the nth degree, if I say I don't know exactly what that means, don't be mad at me, but I'll tell you right now, every time I tell you that I can't answer a specific question, don't worry. You'll be able to go online anytime you want on YouTube, and you'll find plenty of other YouTubers who will tell you how little I know, and I shouldn't be here. So, Robert, someone else will tell you how this works. Oh, I'm having fun here, you guys. Oh my gosh, I'm having so much fun. It is such a crazy world out there. Look, the gamma thing, someone here will tell you about it. People here are familiar with it. That's the beauty of this chat room. There are a lot of people who help other people out. So keep your eye open, Robert. You'll probably find someone who'll comment on your comment to help you figure out what's going on. Otherwise, you'll certainly be able to figure out through doing Google inquiries. But you don't want to hear it from me if I don't understand it to the nth degree, because now I'm just wasting your time and I'm just blowing hot air, and I don't want to do that. I get accused of enough stuff by others. I don't want to give them more fodder. So I apologize for not being able to answer the question, but at least I'm trying to be honest with you, straight up with you. Jonathan, good morning, sir. I understand short sale restricted, but how is it implemented? Just a switch on a computer somewhere? Jonathan, it's probably it might be that simple at New York. I know that the New York Stock Exchange has gone very much computerized. Of course, there are fewer traders on the floors these days. I'm not even sure how many people are on the floor for New York right now. I don't know if New York Exchange is allowed to have their regular contingent of people down there, because of course it's a New York State issue that we're talking about, right? It's New York State that will decide when and which businesses can have people where and what numbers. But this short sale restriction thing, this is routine stuff for New York. This is not complicated. This is not rocket science. It doesn't require 25 people to enact it. You don't need a special meeting. This it could be as simple as like that. And every house, every trading desk that is, every firm that's a member of the exchange with their trading desks in their systems all get the alert. Boom, the alert, GameStop. And there's an asterisk beside the stock symbol, or there's something somewhere where someone's trying to enter a short sale and it'll say restricted. You can't do that. Stock's on restricted list. Unable to execute the order at this time. Stock's on restricted list. Oh, then they all know. They'll all know in a microsecond that, oh, yeah, okay, we can't. And the shorters know. The guys who want to short this, they know. They have the level 2, they have the level whatever. They have access to the to much more sophisticated trading systems than we can ever afford to get into. They all know as well. And so it's all a done deal. But it's not in effect. I don't think it's in effect today, because it didn't drop yesterday by more than 10% during the day. And it hasn't done it today. So I think we're on a wide open. Anyone can short this any way they want. I think that's what's going on here. Am I wrong? Can someone help me out? I am kind of tired, and it's been a long time. Oh my gosh. There's nothing wrong with not knowing. Well, that's what I used to think. When you're honest with your viewers, I used to think that was a good thing. But apparently, I get a lot of thumbs downs from people who just don't believe anything I say, no matter how I say it. And so it's got to be wrong, and it's got to be a shill. I got to be a shill, and I've got to be an employee of a hedge fund. Because no matter what I say, and no matter how I say what I say, whatever I say, that's wrong. And so, okay, you gotta just let people feel what they feel, think what they think, and you gotta move on. 171 thumbs downs, 2,800 thumbs ups. Thank you all for these thumbs ups today. This is really a sign, indication of what you really feel. The higher this ratio goes, the better it looks, and I love you for it. But there will be those who will be around a while to be in opposition of whatever we're talking about here, however we're talking about it. So sorry, folks, it is the way it is. 2,900 thumbs ups now. Thank you very much. If we get to 3,500, we'll have a 20-to-1 ratio between up and down, and that would be just a beautiful thing. We're now at 3,000 thumbs ups, and I thank you. If you could please hit that thumbs up button, just smash that thing. That would be just a beautiful, beautiful thing, and I thank you all for your support, every inch of support you're giving me. I love you. All right, 210 on GameStop. Dow is up 81 points. Yay! It's up 81 points. It's a quarter of a percentage point. That's all it is. It just looks prettier. It looks prettier in green, don't you think? The S&P is down 21.7. Was down 26, 28 maybe earlier. Not a big drop. Half a point, half a percentage point. NASDAQ actually better. NASDAQ was down 1.7% early this morning. It's now down 1.5%. Tremendous improvement? No, it's down 205 points. But these markets aren't going much lower overall. There could be, though, certain issues over the next few months that you're going to hear about where maybe an analyst will downgrade a stock or change a buy order to a hold, outperform to a perform. You're going to hear these kinds of ratings on some companies that may experience supply chain problems with their products and their parts. Just be forewarned from yours truly if you sense that. So a manufacturer producing complex parts might be caught up in supply chain issues, especially if they're bringing in parts from dozens and dozens of suppliers globally. Do not be surprised if that could happen. Okay, I've just wanted you to be aware of that this morning, so that you're not blindsided by these kinds of reports. Okay, we will stay on top of that. GameStop 210, another drop, because we were at weren't we like 212, 14 a little while ago? It doesn't seem serious, but it's 209.97. I mean, going through 210 like butter. Should we be concerned about that? I don't know. 4.1 million traded on GameStop. Not too worried. Not too worried about the volume here that's going on. Okay. Excuse me. Where are we at? We got comments coming in here. Love you guys for these. Roaring Kitty tweets. Cat's gotta go. And Jay Gunn. Whoops. Wow. Look at that. GameStop went from 199 to 210. Some quick math tells me it's 2.5% increase. Less than 30 minutes. Best stock ever. Thank you all. Let's see here. Also, thank you from Giro Lamo. Thank you for that generous donation here. Thanks for all, Uncle Bruce. I'm in GameStop since February, and I'm proud to hold it at 170 a share. I now have other bullets for GameStop. Do you think it's possible to have another dip, or is it a better buy now? Anytime. It could be an anytime thing. We've watched a little mini, but it didn't get the 10% drop. The 10% drop has to be, I think, down to 188 or 189 or 190. So the first dip I would be taking advantage of, if you got it, would be 191 for sure. If it could even do that, that would be 9.8%, lower, just before going. But I don't know if the dip will go beyond 10%. Will it get to like 10.1% and then snap back $15 a share? I don't know. But right now it's $212.99. So compared to last week when it was $348, this is a dip. But is this the last one, or will there be more? Well, I'll be here. Y'all have to make up your own minds on this one, okay, guys? Just so you know. But if you're a long-term holder, it shouldn't matter really. Yao, thank you, Yao, for becoming a member. Hey, Bruce, VACQ Rocket Lab is valued at $4.1 billion. And Gore's Holdings, Matterport at $2.9 billion. 23andMe, VGAC about $3.5 billion. Navstar, Spire at about $1.6 billion. Should we read into these numbers much as far as growth and future price? Well, if they were all in the same business, doing exactly the same thing, maybe you have a point. But because they're all in different businesses entirely, there's no, comparison to a Rocket Lab and a Matterport with 3D imaging, and then 23andMe and Spire. There's no we can't compare apples to apples here. We can in a way because they're all SPACs, and they're all going to get listed with their new deals. Yeah, we can compare that, sure. And you might say to me, Bruce, I don't know why you recommended all these 6 SPACs, because 4 of them went way up and 2 of them were so. You're a loser. You should have just given us the 4 winners. Everyone will have their opinion on this, and their judgment day will come on these, but they're all different businesses. And one stock might be the rock star of the 6, and then number 2 is a distant second place, and then there's 3rd, 4th, and 5th all tied up, and number 6 is the laggard. You tell me which one is which. I don't know. I'm just coming out with a list of a list of 6 here. I like these guys. I like these deals, and I like the participants. You have to decide for yourselves, which one of these you want to be into, or in what way, right? And what's your exit strategy? Some of you want to double to $20 and get out. Some of you want to get out at 30. Some of you will never hold it past 50. You're gone. I get it. It's okay with me. There's no hard feelings. You're not hurting me doing whatever you're doing. I just want you to make money. This is make money. $213.94 on GameStop. Now getting stronger again. So it's kind of legging up now, isn't it? $214.50 up 467. As I've been speculating, could there be a buyer or buyers coming into this stock? Pardon me 1 second. Could there be buyers or buyers coming into this stock in the next day or so? Today, I'm just adjusting my pillows on my chair. I'm only 4 feet 8 inches tall. I'm a very short guy, and I gotta have pillows on my chair. As everyone is asking, how tall is he? How tall is he? 215, 216. So could there be a buy wave coming in here of unprecedented numbers to make sure that not only is there blood in the water, but that there will be blood in the streets for those outfits that dared take a run at this one again? Could that be happening? Because the stock right now looks really, really good. I mean, look at this chart for today. That's pretty darn good. I gotta say, let me get rid of this comment so you can really see this chart. There we go. Look at this. Now that's a snapback. That's a V recovery, a very strong V recovery. Okay, 215.50. Yeah, that's looking pretty good. Volume 4.5 million. That's all. That's it. This is not a crash. That's not, no. But this is interesting. This is this entertains me to no end. I gotta say, AMC right now is at $14.39, up 83 cents. Way to go, AMC. Go AMC. Go. I'm cheering it on. Please go to 15, go to 15.50, go to 16, go to 16.50, go to 70. Go. Just please give us $2 a day, AMC, every day for 10 straight days. That would be great. I know a lot of you own it. But I'm I have my thoughts on it. Everyone has theirs. I'm glad to see it's doing what it's doing. I'm just so relieved. I know a lot of my viewers are a lot better off here than when it was $9 and $10 a share not too long ago. So yeah, let's go. Please go. 214.49 on GameStop as it jumps about and figures out where it's going and what it's all about. It's on the plus side of the ledger. No 10% drop yet. Will there be one? No idea. News, I don't see any news. No news there. No press release. No. Dow Jones, any news on it? No news on GameStop. It'll be quiet until Tuesday when the financials come out and the company does its they do their conference call. But tomorrow is witching day. Today is stock option inform day. Tell your broker whether you want to exercise your call option based on the price of the stock now versus at 199. All the 200 calls, the 205s, and the 210s are all in the money now They were out of the money this morning at 199. Now they're in the money. If this goes higher, every $5, a bunch of contracts are in the money. Another bunch of contracts. It just gets a bigger and bigger gamma issue the higher the shares go. And again, I'm asking, is there a player out there or players out there who were sitting like this morning going, well, let's see how much comes in. If it comes in, we'll let it come down, and then we'll pick up some cheap paper. But if the selling dries up, maybe we can go to 250 today or 275, or we'll catch a whole bunch of these contracts in the money. I mean, we could, a $200 call contract was only in the money $13 when Bruce was talking about it at 9:40 in the morning. But with 20 minutes to go in the day, and we're trading at 275 a share, that contract is $75 in the money. That's a problem for the writer of that contract. They wrote 15,000 contracts? Oh, that's a really big problem. That is, how many shares are they short? 1.5 million for the $200 call writer. Well, how many were sold at 205 and at 210 and at 215? And they're all upside down too. How many millions of shares are we catching if this thing goes to 275 today? I'm wondering if there's somebody out there thinking that way. That's what I'm wondering. I can't answer that question. No one's calling me. My phone hasn't rung all morning. No emails have come in from any insiders at hedge funds going, psst, psst, hey, listen, Bruce, I gotta tell you something. My boss will kill me if he finds out. I haven't got any of those. I wonder why. Why won't anyone share me with that information? Do you think I might reveal it to 6,485 live viewers simultaneously around the world? Who would not do anything about this if they knew that information? Would you? You wouldn't do anything. We wouldn't call. You wouldn't try to buy some of this stock yourself, would you? If you knew someone's going to run it to 275 today, would you? Would you? Or would you? Yeah, I wonder. Josh, thank you. Hey, Bruce, can you please try to explain to a noob how the SPAC stocks are only risking the amount over $10? Does my broker pay me back that amount if the merger doesn't go through? The broker won't pay you back. It's the company itself. And it's not if the merger doesn't go through. It's if the company, the SPAC, cannot make a merger with any company in the first 2 years of existence being on the exchange. So if a company has been listed now for 6 months and they've announced a deal and it's supposed to happen in the next 90 days, they'll have their deal done in 9 months. That's not uncommon. But if that deal fell through and they try another deal and it falls through and then the clock runs out, 24 months goes by and they haven't been able to make a deal, even though they've tried 3 or 4 deals and they've all fallen apart. For what reason? I can't imagine why not. I can't. Because if the board of directors of this company says, we'll merge with you, and the board of directors says, we'll merge with you of this company, and then Wall Street comes in and says, here's another $500 million on top of the $300 million you got in trust. Here's another fight. You got $800 million now. You two guys merge out. Here's $800 million. Go nuts. How can that not happen? I don't know. I've never seen it not happen. But still, there are the doubters out there. They want to be sure if the deal can't be done. Any deal cannot be done with any other company. 24 months goes by, $10 a share is refunded to all the shareholders of the company at that time. And the stock is delisted. The company is wound up, and millions will be lost by the speculators who founded the company and tried to raise this money. There's guys out there who put up $10 and $20 million for all the legal fees. They're the ones out. This Richard Branson and his buddies put up $10-20 million to create Virgin Group Acquisition Corp. Okay, then they went out and raised a bunch of money at $10 a unit, put it all in trust. Then they went out and found a private company, 23andMe, cut a deal with them. Then they talked to Wall Street and found another bunch of money, another $500-600 million. 23andMe will be sitting with $950 million cash day one as a New York traded company. You think that deal's going to go through? I think it's going to go through. I don't care what any lawyer says. I don't care what any pundit says. I don't care what CNBC does with stories about short sellers trying to sell SPACs say. This deal is going through. This deal is funded. It is being blessed by some serious pension, mutual fund, investment money, including hedge fund money. And these players are not going through all this so that you can get a $10 refund because they can't do the deal. I don't think so. It's going to happen. Yeah, so you're risking the difference between what the stock is trading at right now, the SPAC, versus the $10 it came out at, $10. So the NAV site holdings is at $10.32. What are you risking? 32 cents. And you're giving up some of your time because you're buying it and you're going to hold it and you're going to wait for the merger to come through. You're not getting your $10 back until 2 years from when they went public. That could have been 6 months ago. You got to wait 18 months to get your $10 back if they don't do a deal. But I think they're going to do a deal. They're doing a deal now. So that's the end of that discussion. Yes, indeed. 211 on GameStop. As high as 218 today. So it has these waves. It's got these little waves. It's positive today. It was positive yesterday all day until the very end, and it had a little gain. Is $200 the line? Or around 200 the line? Kind of line. Maybe that's the line. Maybe that's the floor. It was 172, remember? 172 when the first drop took place, and then came back up, and then it was another drop to 172, and now it's like 200 seems to be kind of the floor. Kind of. Not exactly 200. It did trade at 199 today, but it's kind of around 200. Yeah, so there you go. Kind of. Hologram. Bruce, I grabbed some VGAC today. Also bought some Virgin Galactic. Right on. Goes good with my TSLA. Right on. Fortress is dipping below 10, which means you can actually make money. You can actually get rich. If you buy at $9.99 all the stock you can, you're guaranteed to make a penny on that deal no matter what. No matter what. Of course, if they merge into something and it goes to $5 because people hate the merger, you'd lose $5, but you're losing $5 on a $3 billion merged company. I think it's unlikely. I don't think that's going to happen, but that's just me. Starboard is a 10.08. You're risking 8 cents on that one. 8 cents you're putting on the line, baby. What can I tell you? Take your chances, folks. Line up here. Take your chances. We're having fun here. Get on the ride. We're getting on a roller coaster. We'll see what's going on. One share at $9.99. Get rich quick scheme. Here we go. Harry, maybe 1,000 will be the floor for GameStop. $1,000 a share. That'd be a good floor. Yeah, that'd be a pretty good floor. I mean, certain stocks do have floors way up there. I mean, Amazon has a floor. Was it 2,900, 3,000 a share? Seems to be its floor. Yeah, I mean, maybe GameStop will have $1,000 floor a year from now. Maybe. I don't know. It's 211 right now. That's what it's doing. Very interesting. Okay. Is it possible? Aaron wants to know, is it possible if hedge funds pump and dump already exists, extremely volatile GameStop, doubling down on implied volatility, then short calls and puts hedging, effectively shorting implied volatility? Look, they're on all kinds of sides of the market. They're all over the place. But at the end of the day, if there's a delivery squeeze coming up because the SEC is clamping down on failure to deliver stuff, they shut the shenanigans down on the failure to deliver, we may have ourselves a real run here where you got to buy at any price because otherwise you're bought in at whatever price. That might be happening already or could be happening, in 10 minutes. I mean, I don't know. Thank you, No Mass City. Hey, Bruce, can you give us a quick rundown on why you are recommending FAII specifically? Thanks. Love the show. I believe that's the company that's taking over the 850 or 860 therapy centers. Isn't that Fortress? I've got 6 of these, and I've got a whole lot of other stuff on my plate right now that I'm trying to cover at the same time. So I go to my hard drive right here. This is the hard drive that never crashes and never needs a Windows update. And it can't be hacked because It's right here. So FAII Fortress is acquiring or is merging with ATI Physical Therapy Centers. That's the company with 860 locations across the United States for physical therapy for people who've been in injuries, who had surgery, getting on, and insurance pays a lot of the fees to FAII. They don't really have collection problems. When people get sent there, they get sent there by their insurance provider, and the insurance provider has already agreed with the fees for the services to be rendered and how many sessions they get. And ATI Physical Therapy has their billing system all set up, and they're an operating company. They're an operating entity with 860 locations. Story goes, I think they're going to 920 within the next year or so. This deal values it at $2.5 billion, and they'll have $650 million in cash to fund their expansion even further. So they'll add another 6%, 7% locations. This is a mature private company becoming a public company through the SPAC. And I'm getting the impression and the hunch and the gut feel that within a year or less of being public, they might do secondary financings at much higher prices. They might do secondary offerings of bonds at 0% interest rates. I don't know. Or they might merge with other private providers that are out there, like regional providers, and just gobble them up and just pick up regional players all over the USA and eventually get to 3,000 locations. And because of the economics of scale, the economies of scale, they will net out some nice margins from their existing payers, the insurance companies for healthcare. That's what these guys are about. This stock is at the risky price of $9.99 a share. That's called the sub IPO level. That is a deal of deals. And can it go to 50 to 100 a share? Yep. Could it go to 200 a share? Yep. First day? Nope. But eventually, yep. Do you want to be part of that? Buy and hold it. Grab it. Hi there, Jen.
Good morning.
We both have the same color tops on today.
We do.
It's exciting. This is awesome stuff. Would you like to see Jen today?
I did that without even thinking.
Would you like to have Jen make an appearance? Here we go. There's her shirt. There you go. Yeah. Thank you, everybody, for being here. Hey, Jen. What you say? I'm kind of hungry.
Is it bagel time?
Oh yeah, I think so. Yeah, I'm starving.
Egg, cheese.
Yeah.
Jelly.
I'm thinking eggs.
Butter.
Cheese and egg. Yeah, egg and cheese.
And egg. Egg and
yeah,
cheese.
that'd be great. And maybe some ketchup.
Oh, I don't know about the ketchup. There's a real shortage on ketchup.
Hard to get ketchup from Jen.
It's hard to get ketchup up here. Oh.
Ketchup is Jen is anti-ketchup with eggs. There's anti-dentites on Seinfeld, and then there's anti-ketchups or ketchice, anti-ketchup ice. Yeah.
Your viewers know that cannot possibly be true, because who's my team?
It's true.
Where do they play?
Pittsburgh Steelers, her team. They play at Heinz Field.
There you go.
How could she be anti-ketchup? Whenever they get to the 20-yard zone, the ketchup bottles come down. They're in the red zone. And so yeah. I mean, she's a big fan of Heinz. But I just can't get her to put it on my plate. I just won't give me any to eat. I don't know. Dave, I'm on Robinhood, but opened an account with Fidelity yesterday and started a partial transfer of my GameStop. They still show up in my Robinhood account. I feel like I'm in limbo. Can I buy more GameStop, or would that cancel the transfer? You can buy through Robinhood, but I wouldn't recommend it because you're transferring out. So you want to fund. Well, if you have funds, you'll fund, the other account, but you're gonna have to wait for the transfer over. So you might be locked out right now because they won't allow you to open a new position, because that means it's 2 more business days to settle out the position before they can transfer. I mean, it's you got to just kind of knuckle down and say, okay, I'm transferring, and that's it. I'll wait. I wish I had an easier answer for you, but you're in the middle of a transfer, so there it is. It is what it is. Sorry. Okay. We gotta move on here. Comments. Can't keep up with you guys. You're just flying in here. You great, you wonderful people. Thank you, all of you. We're gonna be dipping at the. We're gonna be any unsettled funds will cancel transfer. There you go. I'm gonna be dipping that bagel. We got bagels happening here. Oh, I'm hungry now, Bruce. You get French's ketchup only in Canada. French's. I don't know. But we have Heinz, don't we today? Yeah, right now we have Heinz. We go both back and forth. I mean, but
it's harder for us to get fries out here.
Yeah, that's true.
It's made in Quebec.
It's made in Quebec, and it's harder to get it out here in British Columbia on the totally other side of the country. Rebel, hi Uncle Bruce. I have AMC calls at 16 that expire tomorrow. I'm 69% underwater. Should I lick my wounds, get out now, or wait to see the rest of the day? Oh boy. So you've got till tomorrow. AMC right now is sitting at 14.37. You got $16 calls. You're $1.73 out. Man, you're up 81 cents today on the stock. It's had a good day. It's up 6%. Yeah, you're caught in no man's land. You'll get a fraction of what you paid for them, but you'll get something. Even if the shares go up $1 today, another dollar, you're still 74 cents out of the money. And that would be a 180 gain if they went up another dollar. I mean, that's a huge day. I mean, out of 4 days to have 2 good days like that. I tell you, you wait till tomorrow, you're risking it all. And you got to ask yourself, do I risk it all, or can this stock give me a run now to the 1480 range and maybe I can get 10, 20, 30 cents a contract more and salvage something? I don't know. I'm not watching your contract, so I don't know. Yeah, you're in no man's land. This is not good. Robel, are you able to sell these contracts now and turn around and buy contracts a month from now on AMC that might be 18s? Can you step up higher on the exercise and get time? Can you get at least 2 weeks or 4 weeks or 5 weeks more? Maybe you've got, I don't know, you've got 10 of these and you'll end up with 5 of those. Or you're still in the game, but you got time, but you're further up. Robel, you've got limited choices here to salvage something, and I can't help you there. That's the reality of the options market. And of course, the person who wrote them, they're happy. If you own the stock and you wrote the calls, they're going to die worthless tomorrow if the stock doesn't break 16, and that's the whole point of writing contracts, right? Brian, Gary, how are we looking on the Tesla, sir? How's the Tesla doing? Oh, well, my Tesla, not on order yet. Got a long way to go for that, because in Canada, Tesla is a very expensive beast. And on top of the Tesla, you have to figure in the cost of the electrical connections to the house and the permitting required and all that stuff. Oh, yeah, we pay a fortune for electricity. But nonetheless, I can go to the town hall here in town. I can go to the information center where they have tourist brochures. They have a free charging station there. Anybody can charge a car for nothing. It's incredible. It's an absolute gift. I mean, I would be driving the Tesla to Timmy's to get a coffee with Jen, and then we drive to the town hall and just plug in and have the coffee at the town hall. If it's a nice summer's day, we can walk around the area there and walk around downtown a little. We could do that. What's that? The tourist center, yeah. Oh, yeah, the tourist center, yeah, not the town hall. The tourist center. So we wouldn't have to necessarily get the installation done right away. We could just utilize that, because the amount of driving I would be doing right off the get-go wouldn't be all that much, because I'm kind of here 5 hours a day with you guys, and then I'm Saturdays and Sundays I'm talking to one-on-one people for one-on-one consultations. So I haven't got a lot of time to go for a drive these days, and so that's also kind of, we're kind of looking at ourselves going, are we going to get one of these Teslas and not drive it? This isn't working out. We're going to have to, and I think we will. We get the Tesla, and winter shows up, maybe this coming winter, and we drive the Tesla out of here, and we head south to California and Arizona, and we hang out there with our Tesla, and we don't have to rent a car. We have our own. Now that would be the way to go. So stay tuned for the continuing saga of the Tesla. We don't have enough money to buy the Tesla, though. No, not even close yet to that. Hi, Bruce. I can buy either 5 or 6 GameStop or about 100 VGAC. What do you recommend? Also, ridiculous perhaps, but right now, my sell price for GameStop is $1 million. $1 million. That's Dr. Evil. Things have changed in the world since you were cryogenically frozen. I don't know what to tell you. 100 VGAC gives you 100 shares of leverage. But if VGAC goes to 20, you've made money. If you see it go to, you think see it go to 30 or 40, I mean, I see it going to a higher level over time. In the meantime, GameStop right now is 211. Is it destined for a much higher price immediately? And if so, how high? If it goes up $100 a share and you've got 5 or 6 shares, you're $500 or $600 richer. In order to be $500 or $600 richer on VGAC, you need them to go up $5 a share between now and when they merge and after the merger. So if VGAC is going to, if you think you can see it go up $15 a share from where you can get in at, that's a $1,500 gain for you. $1,500 gain on GMAC would mean a move of about $300 a share. And you've got to ask yourself which one can happen first. Will it happen to both? Possible. But which one is it going to happen to first? And which one of these two is the more risky play long term? What's your tolerance level for risk? Can you handle GameStop jumping up and down from here to down to 100, up to 500, to 200, to 300, from 150 to 250, from 250 to 450? Can you handle all of that? All of that? Well, if you're buying it at 211, maybe you can. But on VGAC, you're buying the stock right now at about 10.52 a share. 10.52 a share. What's your downside on VGAC? A couple of bucks, maybe? Like maybe not even 52 cents if they don't do a deal. And what's your upside? So there's this. You have to decide your personal timing, tolerance, and engagement level. And there it is. And I'm not the guy that is allowed to do that because that's not my role here. I'm just, I can only tell you what I see and interpret, and you've got to kind of go from there. Alba, welcome and thank you for this donation. Also, hey Bruce, what's your opinion of Reddit predictions of 100,000 on GameStop? What's your opinion on that, Mile? Everyone's entitled to an opinion like they are, and anything is theoretically possible when it's theoretically possible. Any stock that's shorted has unlimited potential to go higher. A short seller selling any stock at any price could lose unlimited money, no matter what the stock is. The question will be, is there unlimited loss potential to these kinds of levels for GameStop sellers? That is the question, and we don't know. This only happens when Jen is here.
That was nice.
I spilled some cola. Only when Jen is here, and then I get that.
What's there?
Ooh, we got a bagel here with ketchup on it.
Ketchup.
I get the discerning look when I spill in front of her.
You'll notice is the multi everything bagel.
The multi bagel.
So it's also it's like an onion bagel. Ooh.
Instead of just sesame.
Have fun with those seeds in your teeth, buddy.
Hey, thank you, babe. Instead of just sesame seeds, we got it all. Yeah.
So you guys have to tell him if he has a poppy seed stuck in his teeth.
Yeah. Gotta let me know, or not. Take a screenshot and then post it.
Circle around it.
Take a screenshot, draw a circle around it, and post it everywhere, and say, "Look at this goofball. He eats on the air, and he's got seeds all over his face, and no wonder." That's what shills do for hedge funds. They eat on the air and have seeds in their teeth. Oh, I'm just being so, so you know what? Everyone's going bagel, bagel, bagel. What's the stock at now? 209.15 on GameStop. Okay, 209.15, and I'm gonna have my bagel now. Okay. So nice. Gavin. Hey, Bruce. Any thoughts on March 16 DTCC announcement regarding SEC regulatory filing as it pertains to GameStop? We love the bagels. Yeah, I'm hoping, I'm not guaranteeing it, but I am hoping that this ruling and this new settlement procedure, whatever it is, reporting and everything else, will have an effect over time, sooner rather than later, where it'll be very difficult or very much more of a pain and incredibly more expensive to have failure to deliver situations going forward. And that's what I'm praying will happen, certainly on GameStop, because there is ample evidence that there are a gazillion shares that have not been delivered to clearinghouses by participants in the market. And so, yeah, I'm just looking here going, please, yes, make this a major reason for this stock to just go stupid. That would be, I'm all for that. Yeah, absolutely. 209.25. I have good thoughts about it. I really do. I have good thoughts, but will these good thoughts translate into much higher trading values for the stock you guys own out there? That is the question. We got a lot to follow here, don't we? That's right. GME, 1 in a million. And everything bagel. That's right. Bagel good vibes. Snarky Bruce, Sassy Bruce. Take profits, but keep some GameStop on the side that you'll never sell. I finally saw you get your bagel, Janet said. I finally saw you get your bagel. There it is. He got his bagel. We saw Jennifer's hand him the bagel, just like on the logo. There you go. Absolutely. I got my bagel. If you get a bagel seed stuck in your teeth, well, that could be a sign that the GameStop could run up today. We're desperate, aren't we? Looking for anything, right? 211. How about that? We're up $2 since I started eating a bagel, or almost $2 to be technical. Beautiful. Lucky seed, lucky poppy seed. 211.45. Go GameStop. Go to the moon. Let's run. Are you ready to cruise? Oh man, would I love to be on a cruise. I want to be on a cruise though, the way it used to be. That's the kind of cruise I want to be doing. I don't want to be in a sterile hospital environment cruise. That's going to turn me off. That's not what I'm looking for. I'm telling you right now, Lorenzo, Bruce, if presumably 40 million shares failure to deliver need to be brought by the end of tomorrow's trading day, why is the volume so low this week? Exactly. What is going on? Has there been a rollover done here? Have there been all kinds of shares picked off through call option buying from naked option sellers? Have they just transferred the problem to somebody else over in Chicago and they don't have the problem yet? They have the problem on Monday or Tuesday coming up? Is that it? I don't know. I don't know. I mean, can the broker say to the clearinghouse, hey, we're not short. No, we put in the notice for our covered calls. We have these $100 covered calls, and all the stock we're short with you are owed to us by the Chicago market makers. That's where the stock is. We're flat. We're not. I don't know if this is happening. There's a lot going on. Bruce, I just bought a call for VJs at a $10 strike for April 16. Is this a good buy? This means I can buy 100 shares at $10 each, right? Yes, you can exercise at 10 until April 16. And also, if between now and then the deal goes through and or it doesn't and the shares go up, you make money, right? If it goes to $20 share, no matter what happens, you have a contract worth $10 a share book value. So you got $1,000 contract book value plus whatever time value still has remaining on it if there's still a week or two to go. So yes, and you could exercise it. Yes, you could. And at 10, you are right. Hosea. Yeah, it's an interesting question. If Robinhood weren't actually buying your shares initially and getting them from a Citadel dark pool, were they effectively dipping short positions? Well, they would be short to you, like they're short stock because they say you're long, right? You're long, you got it. They don't have it. They buy it from Citadel, who doesn't have it. But Citadel says, you're covered. We got you. We lent you the stock. You've given us this money. We have no call on your stock. Now it's Citadel's problem. Is that why Citadel just raised $60 billion? Because they're carrying a whole bunch of stock short from all their clients on all kinds of other positions, including GameStop. And the higher GameStop goes, the worse the Citadel problem is. That might be the issue. That's possible. I don't know. Herring, getting seeds stuck in your teeth as a product placement, you're a shill. We read you, Bruce, like we read you like a cheap dime novel. No matter what stunt you pull, you're up to no good. Well, that's why we've subscribed to you. We're subscribers, and that's why we become members, because we know you are a shyster, and we're on to you, buddy. You don't fool us. I can't get away with anything. I thought this was going to be easy, but no. I can't get away with anything. It's crazy. Here's good advice. Very good advice. Sell a fraction of your position at price X that returns to you the cost of the stock you bought. Then sell the other stocks, the rest of them out in fractions at different points as it keeps going higher. Very sound advice. No kidding. There you go. Gubon, yeah, I have not fully transferred from Robinhood to volatile with my GameStop AMC. Once it squeezes over, I'll transfer the rest of my portfolio over. See? Oh, here we go. Hi, Bar. These kids don't know dime novels, Bruce. You're talking about, you're using expressions from the 50s. They have no idea what you're talking about. They used to be popular. I learned about them, dime novels. Yes, there used to be a day when you had some time in your hands. You would read a novel. It would be a paperback little book. It cost you a dime at your local tobacco store. And it would be Andy Hardy or Nancy Drew, or it would be some romantic, like the Harlequin romance equivalent of the 30s or 40s or 50s or 60s, or literally Harlequin romance. And they would be dime novels because they would cost a dime. Those days are over. They don't cost a dime anymore. Dan is saying, I've been broke in the past. I can be broke in the future. So if this doesn't work out, I've been broke before. I know how to be broke. Rich people don't know how to be broke. They can't handle it. But the poor know. They know they can survive being broke. It ain't fun, but we know how to do it. I know what you're saying there. Oh my. Danielle, if you check eToro, 9% of their users are long GameStop. 20 million users announced. So that's 1.8 million users long on GameStop. Anyone's guess how many shares they average? 10? They own 30% of the company. That's the case. Wow. I have asked this question before on this channel. I've asked you folks. So right now, there's 6,000 of you here hanging out, watching me eat. I wonder how many shares of GameStop are being represented right here, right now. Is it 1 million shares of GameStop that's right now watching me, listening to me talk? Are there 3 million shares of GameStop here? 10 million? You gotta wonder, eh? Gotta wonder. If I get up to 10,000 viewers, the stock goes stupid crazy, and I have 23,000 viewers, which I've had before. 23,000 viewers. Are they all into GameStop? I would think so. If the average is 100 shares a person, 2.3 million shares. Is that what I have watching me right now? I'm, here you go. You want to know how many we got? Here's how many we got. Look at all the shares we got here. 30, 130, 10, 125, 3, 250, 460, 100, 4, 25. It isn't, my viewers on this channel don't have 1 or 2 shares across the board. There are, I think, millions of shares here, and there are millions of GameStop shares following me all the time, coming and going in this view, watching what I'm saying and all that stuff. You might notice one thing that I didn't do, that I'm not doing. And that is, I'm really not telling you guys to sell this stuff, am I? No. I'm saying to all of you, if you can afford to hold it, you own it for cash, and what you have, you can afford to hold. You don't need the money that this stock represents for a while. I would just sit tight with this stuff. I wouldn't sell any of it. I wouldn't give the satisfaction to the buyer to get any of your stock, especially a buyer that's short this thing. You might be available. Some of the stock might be available that you have, much higher prices, and that solidifies your win. Just solidifies it. Of course, there are those out there who claim I sold out a long time ago, and I'm just stringing you guys along. That's my diabolical plan. To quote Bill Murray in Ghostbusters, that's your whole plan? Get her? That was your plan. That was your whole plan. Get her. Bryce, thank you for being here. I own 159 GameStop. I also eat crayons. There you go. I got 4,601. There you go. Keep shares, sensitive data. It's like your bank account info. Bruce's evil plan is to string us along on GameStop till we can all afford a Tesla. That bugger. We all wanted Hondas. Now he's making us buy Teslas. What kind of a guy is that? Oh, what am I going to do with it? I got to buy her at $99 and I got to sell it $800. There you go. Why am I dripping with goo? What is all this gooey stuff from Ghostbusters? What's going on here? Oh, man. Greg, funny thing is that I had 4 in January when I thought the squeeze was happening. I have since 20 times my position. I'm certain I'm not the only one. They would have been better off to just let it happen. That's right. Because it didn't go when it was supposed to go, I got more. Now I'm really mad at you guys. I bought more of this stuff. Oh, I'll show you guys. Sean, what is the end game though? How do we ensure that if this thing moons, we don't get left holding the bag when it dives? Well, the question is, would it dive? Really? Because I think if it moons, it just has new trading floors at higher levels. And you've got new shorters who've taken the places of the old shorters at higher levels. That's all it is. And the stock just rotates over and rotates over. And it'll just hang out between 400 and 600 or 600 and 800 or 800 and 1,000. It'll just hang out at the new level. And you decide when you've had enough and how you want to play it. One day at a time. This is a common story. I've doubled up. Cheap. David. Hey, Dave. Uncle Bruce the Bagel has lost its mojo the last few days. We're 213. We're up $4. Are you still long on a bagel? Is it time to reinvest in banana bread? Love you, pal. Got to get to a Costco. I got to get to a Costco bad. I need carrot cake, the banana bread. But the nearest Costco to here that we can get to is Calgary. 5 hours, 5.5 hours by car. For whatever reason, Costco doesn't offer at-home delivery from the Calgary Costco to Creston. You think, eh? I mean, I got a Costco card. I'm like, come on. They won't deliver to me. Darn it. At least 5 hours each direction. But it's a 10-hour round trip to a Costco store. I got airtime and I got sleep time. Ain't no time to drive 10 hours in one day to get some banana bread or carrot cake. Is it possible for meme shareholders to coordinate, pick a hedge fund, and short their stock into the ground while continuing to squeeze memes? Very few hedge funds are publicly traded companies. Out of the 15,000 or so that exist, a handful are actually part of a public company, and they are worth hundreds of billions of dollars in market cap. So you have no power to defeat these guys. You can't rough them up. No. So I don't think so. You're better off just buying the stock that you think that they're going to be hurting the most on. Just buy it. Just buy the stock. GameStop. That's the one they're leveraged on the most, from what I can tell you. And if 1 million viewers of me and the other YouTubers and the Reddit people and the Wall Street bets, if 1 million of us got out there, 1 million, and everybody bought 1 share, that's 1 million shares of buying. Everybody bought 2 shares, it's 2 million shares. Everybody bought 10 shares, that's 10 million shares. Everybody bought 100 shares. That's 100 million shares of buying coming into the stock on as long buyers, buying long. This stock is not available at $212 for 100 million shares of buying. There's just no way. There's just no way. So you want to get these guys? Put a pool of people together, take a run at the GameStop, and watch what happens. That's the power of the gang, I would say. You want to cause discomfort to the shorters. That's the way it would be done. The easiest way to be done would be done. Pardon me. I'll be right back. Man, I see that video of that ship in the water like that. Oh, it brings back good memories. Julian Sheets, how you doing, buddy? Good morning, Bruce. Could you take a look at this and discuss? I can't do that at the moment. I'm on the air, but I'll have to look at it later. Maybe I can discuss in the afternoon show and take a peek. 211 on the stock. I think we gained $2.60 while I ate the bagel. Every little bit helps, but it didn't hit a new high today while I was eating the bagel. What can I tell you? Don Russell. Bruce, is it possible for someone to put together a spreadsheet correlating what you had on your bagel any given day with the price increase of GameStop that day? This would give us a moonshot. I mean, were you eating the grape jelly or were you eating egg and cheese? I mean, which one is working out for us here? Did you just get in? Did you just get here? Would it do damage to hedges if we all coordinated with limit buys at $10 increments below the current share price? Then when we went to dump it, they hit the walls on the way down. If we all coordinate with limits buys at $10 increments below the share, oh my gosh. Well, yeah, I mean, if a million orders came in through all the brokerage firms globally to buy, a million shares at 201. A million at 191, a million at 181, a million at 171. You show that kind of power. The level two machines would just go ballistic. They would just go, oh, look at all the buying. That would really create a buzz, but not necessarily a run on the market. But then again, maybe that kind of power being organized coming into a market might cause sellers to go, whoa, wait, there's all kinds of buying demand here. We don't know why. They never heard of Uncle Bruce. They never thought. And so they back their sells, and these, the buyers that are trying to buy right now are realizing there's a vacuum of stock, and it might trade in the 225, 235 range just on this, worry of this wall of support. Now, if new orders come in at 205 and 215 and 225 behind, $10 behind the last trade, they keep coming up, then the sellers might back off even without you ever buying any of it. On the other hand, there might be a big hedge fund out there going, wow, we could offload 10 million shares of this stock from 225 all the way down, all in like 20 minutes. We could, in 15, 20 minutes, we can offload a bunch of stock and take a run at all these guys. All of them. We'll take a run at everybody. That's how powerful we are. Then you've got to decide, you want to keep putting in those buy orders and pick them off now at 155, 45, 35, 25. I mean, you're in the war now. Again, I don't know if 10 million shares are wanted at $200. That's 20. That's 200. That's $2 billion worth of stock. Am I right? 10 million shares at two. Yeah, that's $2 billion of buying power. I don't think I have that kind of buying power with you guys. I don't think I can say I want you all to put in a buy order right now at 201 a share for as much as you can buy. I don't think we'd have that kind of buying power. I think I would need like several 100,000 people here at the same time to be doing it. But then they would accuse me of running a market, and we don't want to have that happen. I don't want to get that issue coming at me because that's not what I'm doing. I'm just interpreting what I see, and I'm reacting to a question that is a theoretical question. But in theory, there's theoretical answers, and so all of you have to decide what you theoretically want to do with this theoretical information that I'm providing. That may or may not be right. Anyway, I'm doing what I can. Yes, it's illegal. There you go. Diz, thanks. I think you'd run into legal trouble if I did that. If I went out there and told you all to do this at the same time and just kept yelling at you, they would accuse me of running a market. And that's not a good idea. So you got to do it on your own. And I can't do it. The Bruce bounce is real. There you go. Oh my God. I'm not paying 201. Them's are suckers prices. I'm buying at 101. I'm buying at 61. If these guys want to crash this market, I'll buy them down there and I'll catch them down there again. Well, there you have it. The bounce is real. I'll buy at 100. Oh my God. Do you realize that BlackRock is also a hedge fund, is long GameStop? This is true. There are hedge funds that are long GameStop, and they're looking at the big picture on the upside. So yeah, that's true. Yeah, just stop talking about this. Not involved in any way whatsoever. Blunt bagels with Bruce. Greetings from Texas. Thank you, Nick. Bill, thank you. Adam, so you're saying there's a chance. You're saying there's a chance. This damn right. Whatever you coordinate. I don't know from nothing. I'm just here observing what's happening out there, and I had no idea, officer. No idea that a wave of buying of biblical proportions was going to come into this stock out of nowhere at coordinated pricing in coordinated ways. I had no clue. I was just commenting on what I saw and was just shooting the breeze with my wonderful viewers, a bunch of whom are now members of this channel. And speaking of membership, those of you who do not know, we now have a membership program here. If you'd like to comment on the chat, please become a member of the channel. If you become a member of the channel, you have certain perks that you get. One, you get to use some emojis that we've created. More are coming, I promise you. I'm also offering my members, there will be special videos made just for them from time to time. You may find as a member that once in a while you will get an email through the member link that YouTube provides me, and or you'll get a video made just for you that will cover a new stock that I'm now talking about that might be on my favorite list. You'll get a heads up on the entire channel, because you'll get a private notification before anyone else does. And that's one of the perks of being a member of the channel. I want to give back to you for giving to me. And I thank you. And by making this move to membership, we think we have pretty well eliminated the hate messages that we were dealing with here for days. I was spending hours a day just trying to keep nasty comments from surfacing and trying to eliminate them. Or now I can just talk to my viewers like I'm talking to you and bring out my humble opinion of what I think is going on in plain English, which is the point of this channel, is for me to talk to you in plain English. So thank you, those of you who have become members. Those of you who are thinking of becoming a member, I so appreciate it. The cost is $9.99 American a month. And the way I justify that, or I try to, is say to you, I do 2 live shows a week on normal days. And today looks like I'll be here right about now, 3 hours in the morning, 2 hours in the afternoon. That's 10 live shows a week, at least 40 live shows a month on average. For a $10 contribution, it's 25 cents a show to be part of the gang here and get these videos, use the emojis, and other perks coming down the road. And so I thank all of you who have decided to become a member of this channel and are supporting me this way. It really has been a blessing. This is the 3rd day that we've been doing this, and it's been an absolute blessing. Jim's, thank you. Naz, thank you. Because we are not battling this absolute war that we were in the middle of that I wanted no part of. Morons, and thank you. But unfortunately, there are people out there who targeted this channel as an enemy of the state. And so they went after me. And what can I say? They came out hard. And we had to make this move to just have a reasonable, calm, enjoyable environment here in the chat area, which I'm so glad we have. And we want to maintain that. So thank you of all of that. Max, Toronto loves you. Uncle Bruce, thank you. Won't somebody think of the Bruces? Think of the Bruces. Thank you. Jazziest Beast. Thank you, Jazziest. Thank you, all of you. Onwards to Valhalla. Joe, thank you as well. And there you have it. So I haven't said hi to everyone today that's signed up and everything. I just wanted to concentrate really on my talking points today. As we go forward, we'll have our stable of followers, and I can just get into the flow of letting you know what I see. But I welcome all of you who have decided that, yes, I want to be part of this channel. I want to be part of this guy because I don't want to I don't want him to be fighting all that hate out there. I'd rather him concentrate on just letting us know what he thinks is going on, because that's what we're all about, and I appreciate it. We have 3,800 thumbs ups now. 3,800 thumbs ups from all of you. I really appreciate this. If you are able to spare a thumbs up for the show, please. I'm always begging for them. We have 234 that are down today. We are definitely ahead of the ratio. Slow but sure, the thumbs down numbers are easing up a bit, and the ups are way outnumbering the downs. And I thank you for showing the street that anyone who's casually coming in here to see how is that guy doing. I unsubscribed from him last week because I thought he was a shill and all that. Is he off the air, or is he still on the air? How are his viewers reacting? And they see the 4,000 thumbs ups now versus the 240 down, and they hopefully will say, well, he's not being outnumbered by the thumbs. And I remember a week ago he had over 1,000 thumbs downs. Now he's at 240. The guy is he's hanging in there, and he's got his core followers. And if they take the time to read any of the comments that are coming in, they quickly realize, well, that's pretty calm over there. That's a pretty good, nice gang of people giving him thumbs ups and very positive comments, and people sharing ideas between each other. There are a lot of investors out here, viewers who are investors who are sharing ideas with other investors. There's sub chats going on. It's happening. It's a sub chat site along with what's happening with me. This is what I was hoping for. This is what I was praying for, and I welcome all of you in to become part of this family. And thank you for tolerating this amateur YouTuber and just hanging in with me and letting me grow this channel and giving me time to mature this channel. This channel is so new. I mean, we only started it in summer. I only had 1,200 subscribers in the first week of December. This is such a new channel that has not even had any chance to establish itself, unlike others who've been out there for a while. We have a long way to go to grow this channel out to its full maximum potential. But I thank you, early adapters, you ground floor people. You mean the world to me, and I really thank you. You've helped me and Jen just allows us to exhale a little bit and just go, oh, thank God, we're not going to be off the air in 2 weeks. So thank goodness for this. We're Bruce can just keep going and try to get better and try to reach out to more people and evolve this channel forward to the point where it's not just about one thing. And that's not what I wanted this channel to ever be. It just worked out that the GameStop story went stupid. I mean, I would have been happy by now if the GameStop shares were $50, $60 from the $5 mark back in December, and then we were now up to this level and slowly building. I'd been just as happy, because that is a way to grow. But this stock didn't wait. It didn't want to wait, and I get it, and it's okay. Stock did what it did in January. It's doing what it's doing now, and more than ever, I'm able to and happy to help all of you try to interpret what is going on and why is what going on. And I know some of you are grateful for this information. Some of you are not happy with how I say it, but I am reading what I'm reading. I'm seeing what I'm seeing, and I'm reacting to it as honestly as I can. And I hope that is good enough. Thank you, Ethan. Thank you. Once COVID is over, can we do a Stock Markets with Bruce convention? All the followers get together, maybe in Canada or maybe on a cruise ship. Oh yeah. I am dreaming of the day. I am fantasizing of the day where Jen and I will do a road trip and head to LA and find a venue there to do an announcement months in advance, giving anybody in the Western U.S. a big heads up. We're going to be here at this location for this day, and we've rented the hall, and tickets are going to be whatever. Get your ticket. We'll have goodies for you, whatever, and meet and greet, all this stuff. And then a couple days later, we're in Phoenix, or we're in Dallas, or we're in Houston, or we're in Atlanta, we're in Tampa, we're in Miami, we're New York. I mean, it's wide open. Yeah. A day will come. There will be a road trip, and it'll be the meet and greet road trip for my American friends. And I would love the same in Europe. Oh my gosh, would that be just a thrill to be able to do meet and greets in the UK and Germany and elsewhere. Oh my gosh. But the channel has got to go down the road further. I cannot do all that with 104,000 subscribers. I'm so tiny. I'm so tiny in this YouTube environment. I mean, there are channels 10 times, 15 times bigger than I am that could pull something like that off. At this point, I am so small that it might not be economically viable to pull this whole thing off. But yeah, there will come a time, and there will be a time where I announce a group cruise. You can count on it. And you've got to know. You got to know that if you're a member of this channel, you're a member of my other channel, you are paying me X amount of dollars per month to be here, you're going to get first dibs. I mean, it only is reasonable that I would go to my members and say, members, I have a special announcement for you. Here's a video for you. We're announcing a group cruise, and here's the travel agency that's going to handle the bookings. Yeah, of course. You're going to get first dibs before I announce it publicly. It's the way I roll, and I will roll because I am dedicated to you, because you are dedicated to me. So become a member and enjoy perks that will evolve as we go forward. Also, advanced ticket sales for meet and greets, all this kind of stuff. I mean, of course, I mean, it just makes sense to look after those who are looking after you, obviously. So again, membership has its privileges, and I'm excited about what's coming up. I am really jacked up, and I'm just hoping against hope that this variant and the virus and all the stuff we've been dealing with, all these, all this pain and hurt and suffering and frustration, and that we're going to get through it. We're going to get past it, and that we will be able to really get out. We really will be able to get out, because this the future will be so exciting. I am really looking forward to it. Aaron, I find it unbelievable that you have been calling the GameStop explosion over 6 months and have no skin in the game. I love your insight. I did my first video, I think in July, and Dominic, and thank you, Dominic and Alexander and Yanni. I think I did my first one in July, and then I started doing videos after that. Andre, thank you. And my thought was, even back then, I didn't know. I mean, the stock had been at $4 to $5 for like a year, and the short position was there, and nothing was happening. I'm just going, well, what does it take? Like, what does it take for this thing to go? Well, we found out what it took. It took a platform like Reddit and Wall Street Bets with, I think, only 600,000 followers on Wall Street Bets by the time it kicked in. There's over 9 million now. I don't even know what the number is on Wall Street Bets. Is it over 10 million now? It's unbelievable. I mean, I have 5,300 followers of this channel on a Reddit subpage, Stock Markets with Bruce. I mean, are you kidding me? I never thought that would happen. I mean, I was at 1,200 subscribers on this channel back in December. I now have 5,300 followers on Reddit. What? So yeah, things have really gone incredible. But am I being rewarded financially because of GameStop? Yeah, of course. Some of you have done unbelievably well, who told me months ago, I bought this at $5 when you told me about it. I only bought a couple hundred shares because I thought I'll try $1,000 on this. I'll throw a thou at it, because it was such a wild story. It was so out of the realm of possibility. Who knew that, by January it would be $483 on the exchange? I mean, $1,000 purchase that got you a couple hundred shares now made you $86,000. Are you kidding me? But my viewers are just going, Bruce, you changed my life, man. This is unbelievable. So I've been rewarded. Yes, I have. I have. So I don't own the stock. I've never owned it. I don't want to own it. I don't want to own any stock. I just want to comment to you and let you in what's happening, because I'm being compensated for doing what I'm doing. This is my job. I've bought into the role of being the play-by-play guy, I guess. So, color commentary from yours truly. And And there you have it. I'm not on the field, but I'm calling the play from up here. So there it is. Jimmy, I feel like Pierce Brosnan and Dante's Peak. Everyone is oblivious to the massive eruption that's about to take place. But then when it erupts, everybody wants my attention. That's me, IRL. Yes, I hear you there. I know the feeling. I know. I'm the guy going, watch out, GameStop is going to go. And I get mercilessly teased when the shares go down in price. They go, yeah, you're some hotshot. You are. Like, it's my fault that the shares fluctuate. It's absolutely my fault. What can I say? People just don't know the full story, and they don't want to hear it. They don't want to know. They want to judge. Shoot first, and don't even ask questions later because he's dead. What do you want to ask him questions for? No problem. Anyway, there you have it. Thank you, all of you guys. I'm going to shut this one down. It's 3 hours, 14 minutes of me babbling on, and it's time for me to take a rest. We're at 208, 209 on the GameStop right now. The Dow is up 164. That is good news. S&P is down 14 instead of down 28 or something like that. NASDAQ is down 179, which is 1.3% instead of 1.7%. So, it's a mixed day. A bloodbath? No, not at all. But we're at GameStop virtually unchanged now in this 209.50 range. I'll be watching it, of course, while I'm off the air. I'll be back on at 3 o'clock Eastern time. Please join me today at 3 o'clock Eastern for the final hour of trading and the first hour of aftermarket. And let's see what's going on here and what is happening. In the meantime, if anything crazy comes on, I'll come on right away. Don't worry about it. I'm only on the couch over here doing more research, more due diligence. For those of you who don't think I do due diligence, I'll be doing due diligence over there as if I work for some of these people who insist that I should do that. I don't see them paying me. I just see them yelling at me. But in any event, 209.99 is the stock price right now. Thank you for being here today. All of your support, following me, 4,200 thumbs ups. Keep them coming, guys. Get me to 5,000 if you can. If you're watching this on the rerun, hit that button for me on the replay right now, live. Hit it right now and get me to 5,000 thumbs ups. 250 on the downside. Let's get 5,000 on the upside, and we're looking good. I really appreciate this support that you're handing me. Thank you all very much. All right, guys, that's it for now. Those of you who want a 1 hour get together with me, I'll be back at you as the day wears on. I got a lot of emails to catch up on, so I'll get to you. Not to worry, and we'll stay on top of this all the way. Thank you, everybody, and we'll see you at 3 o'clock Eastern time today. We'll have some more fun, and I appreciate it. Okay, guys, bye for now.